Good morning, everybody. 10 o'clock. Time for the next Specialist Mortgage Web Show. I hope you're all well. Could somebody just have just comment, make sure you can all hear me, please. I just also realised my camera is very, very high at the moment. Let's just turn that down a bit. If anyone could just say, yes, we can hear you, that'd be great. Yeah, fantastic. Right, okay, we'll crack on. For those of you who don't know, not been to visit one of our shows before, my name's Tony Sutton, Managing Director of Specialist Financial Services Limited. I'm your host for today. Apologies for the shirt. I've just realised my shirt looks like it's alive on my camera. It's shimmering, so apologies, man. Hopefully it doesn't put you off too much. About me, I would give a little bit of details on everybody. Again, if you've heard this, then my apologies, but I still have to cover it. So after almost 6 years with a specialist lender, all the way back in the 1980s, subsequently a mortgage broker for 18 months, set up my first commercial and second charge brokerage all the way back in May 1989 at the tender age of 25. Grew this from a two-man operation, working from a pokey little office in Wembley that was absolutely awful. We was often visited by travellers who would use chainsaws to get through the plasterboard walls to nick the petty cash tins. It was one of those sort of areas. But we then moved on, and at its peak, in 2001, I think it was 2002, we had 141 employees. Fell out with the business partner. I won't go into too much detail, but and I left in 2004 to set up Specialist Financial Services from my kids. What was my kids' playroom in my house? It's in Stanmore that I lived in at the time. And within a year, we've moved into 3,500 square foot office space in Bushy. Traded very successfully for 4 years until the crash took away almost all of my lenders. Not quite, but almost all. But continued with the market. Here we are today. I'm still doing this 41 years later, pretty much. 41 years? Yeah, 41 years next month. So I don't really know anything else. I'm not going to move on and do anything else. A little bit of my claim to fame, also claim to fame for everybody. Excuse the photograph. I did this actually for my kids. My kids have been nagging me for years. My hobby is cooking. I love to cook when I get if I'm able to when I get home, if it's not too late. That's my thing. And my kids have been banging on for years, and then they're subsequently their partners as well. And it was actually my son-in-law who said to me, "Tony, could you put all your recipes down on paper before you die?" I thought it was a little bit harsh. So I did exactly that. So I came up with a cookbook, took photographs of everything, came out with this, I think it's 15, 16 page cookbook. Not available in any good bookshop, you'll be pleased to hear. But a few of my kids' friends have actually taken photocopies of some of the recipes. So they seem to be very popular. So that's my claim to fame. Won't be published because I can't be asked. Our sponsor this month is West One Loans. A big thanks to them, and they're also our first speaker. Please remember, we are depending on outsourced technology. I have already this morning, my laptop is trying to do a Windows update, which I've turned off, but hopefully Bill Gates hasn't written something in the background that's going to turn it back on again, and I lose all contact. Obviously, our broadband not being affected by rain. It's actually sunny today, so we should be fine, but when it does rain in Berkhamsted, apparently for some reason it affects the broadband. Obviously, the speaker's broadband, hopefully they're presenting from where we did their testing earlier on this week and not from a hotel or somewhere in their car or something daft like that. And of course, Microsoft not getting the because we're not using Teams, which they regularly do, and try and make it as difficult as possible. So please bear with us. If it goes wrong, then I've got people in the background who will make sure it goes right. And if you lose signal or any problem, then Pauline still has no sound. That's coming on. Just bear with us if there is any problems. We will sort it. If you have a question, go to the type of message box in the bottom right corner, and we'll try to get to all the questions that are asked in the time we have today. Obviously, keep them clean. This is today's presenters. So we have Pauline Rylands from West One, Rhys Evans from Shawbrook, Chris Pedlar from United Trust Bank, and Josh Knight from Octane Capital. And here are their logos. And also the times that they will be appearing. So start at 10:15, all the way through to, depending on how long they take. Obviously, if they complete their presentation in 10 minutes, it gives us more room at the end. I'll probably rush through my second part a little bit later on because we are absolutely rammed with business at the moment, and with staff holidays, I'm having to help out, which I'll cover a little bit later as well. Some of the things I found. Today's objective, obviously, increase your product knowledge within the specialist finance market. We'll be covering specialist buy-to-let, second charges, residential first charges, and bridging loans. and some help. We're also here to give you help where quite often there's no guidance to us brokers whatsoever, and the guidance that is out there, you have to pay an arm and a leg for it. So when it comes to something like GDPR, consumer duty, vulnerable customers, or just the FCA, that's one of the things that we always try and do, is to keep you informed and try and help wherever possible. And there's certain things we've been giving away now for years and years and years, which have proved very, very popular. Our GDPR, which I'll come on to in a minute, documentation, has actually now been downloaded over 1,000 times. So just goes to show that's people who needed help with something that there really wasn't any guidance out there at all. The presentations, each one lasts approximately 20 minutes, 10-minute Q&A after each session. And please, 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 there's no such thing as a stupid question. I think that might be the next slide, actually. But ask as many questions as you want. It doesn't. If you need clarification on something, please ask the question. We'll cover the questions hopefully at the end of their presentation, not during. Otherwise, I'm made redundant. But please ask questions. As it says, there's no such thing as a stupid question. So please ask away. Of course, they've set themselves questions which hopefully they can answer and hasn't been covered in their presentations. Feedback and CPD, feedback questionnaire will be automatically available at the end of today's show. Absolutely vital to us. Last month, we had a record number of feedback questionnaires completed, which was great. With lots of suggestions. We're now planning for next year what we're going to do, because we don't want to be doing the same old every single time, because A, it becomes boring for you and for me, and B, we want to really we want to be educating you as much as possible. So let us know what you want to see on future shows. It also asks you to rate each speaker for their presentation, also very important, because if we have a speaker that, on occasions we do get somebody who absolutely freezes or just it doesn't come across very well. If we're told, if that's the opinion of our delegates, we don't ask them back. It happens very rarely, but it's also, that's why it's so important. We don't want to be getting people back who you think, I really don't want to listen to this person. Except for me, of course, because I have to do this. Your CPD certificate will be emailed to you by 5:30 tomorrow. Okay, so please check your spam folder. As I say, every single show, please check your spam folder if not received. I guarantee I will have 1 or 2 emails this afternoon saying I haven't received my CPD. It's 5:30 tomorrow. Okay, so just be slightly patient. It's not, we don't just send out something you have to write the details in yourself. We just send out something that's nice enough to actually stick up on your wall if you wanted to. So just bear with us. It will be by 5:30 tomorrow, and then contact us if you haven't received it. Our updated guide for our product commission and prop fees is available at the end of today's show or from our website. So download that. It lets you know how much we earn, how much you earn on not every lender we deal with, because there's some lenders that will be pointless. Actually, there's no point in putting down Halifax residential mortgages, for example, because 95% of you will be dealing with them direct. But for those lenders, those specialist lenders, and a few that you haven't got access to, that the guide covers those particular lenders. Our GDPR, mentioned it earlier on. These are still available. We were thinking of actually knocking these on the head, but it's still so popular that we might as well keep doing them. And I'm no expert on GDPR. Quite simply, all I did back in 2018 was to go onto the ICO website, because there was no guidance at all. Just people saying, you must do this, just not what you're supposed to do. So I went on the ICO website, had a very good checklist, but it wasn't user-friendly at all. So I just copied and pasted it. That's my area of expertise when it comes to GDPR. I'm very good at copying and pasting. And then they brought out an annual assessment. So we just complete this every May. So on folder, got a GDPR folder in the office. And every year, they got the original one that completed in 2018 and one every year since. It's just quite simply, if anyone comes in and says, right, what are you doing regarding GDPR? Well, there you go. This is what we do every year. So it's there for you, completely free. Download it as and when you wish. Also, one of the other things we did was, and again, quite simply, I'm not an expert on vulnerable customers. I don't think anybody is. And what I decided to do when the consumer duty was coming to the fore, I mean, we've always obviously dealt with vulnerable customers in a different way, but there was never much guidance on what you should do in certain circumstances. Just certain customers are vulnerable because of a particular situation, but this also tells you what to do as well. So if you want this, a copy of this, then quite simple, just type VC into the type your message box in the bottom right corner. My team will get that out to you today. Has proved very, very useful for people. I'm told the feedback I've had has been great. Consumer duty, I'm not talking about it later. Decided not to really cover too much of that now. it's one of those things. I suppose there's lots of hype and lots of hoo-ha on this, and of course, what happens is that it just slowly slips away. We're all doing pretty much was what Consumer Duty wanted us to do anyway. One would hope. So I'm not going to be talking about it, but if you do want to learn a little bit more about it, or you are new to the industry, or for whatever reason you've not watched one of our shows before, you can catch up with probably the one person in the industry who is an expert in consumer duty, which is this man, Robert Sinclair, the CEO of the Association of Mortgage Intermediaries, who's been a friend of mine for many years. He doesn't normally present at broker shows or for brokers, but he does for us because we've been, as I say, friends for donkey's years. So 23rd of May, he covered the second stage of implementation, what will be coming as of the end of July, which is available to watch. You can find that on our website. I think it's on YouTube as well, I believe. And also his previous ones, his two previous ones, the one in May of last year and also the one in October last year. So these are available for you to watch. And of course, there's others as well. We've got the ones from last year that we covered, the Sutton and the specialist shows with all these people. When Roger Morris was at Tandem Bank. He's now resurfaced somewhere else. And we're trying to get him to come on possibly next year. And obviously there was others as well last year. And then this year we've had this one. And I also actually forgot to mention the one we had last month. I should have included that on the slides. But this was actually one of our highest rated ones back in February, which was Scott from Roma Finance. And at all our Sutton the specialist shows, we always have somebody who's in a senior position with a lender, if not the most senior position. That's the idea of it. You're listening to people who really do know their stuff. That's the idea of it. And remember, you get CPD for everyone you watch. Of course, that's sent to you again afterwards once it's been confirmed that you've watched the show. So watch as many as you want, and you can probably do your annual CPD in one weekend if you really wanted to. This month's prize draw giveaway, a little bit later on, we will be one lucky delegate will win a £100 Amazon gift voucher. You have to actually stay with us to watch it, so don't just come back for 5 minutes later on because it's likely you'll miss it. There's been many occasions now where I've called out someone's name and they've not actually been watching the show, or have actually gone off. So you have to actually, because I will ask, are you there? And within 20 seconds, you need to reply on the chat with, yes, I'm here. And then you get your £100. So you've got a chance of actually owning yourself a bit of cash today. And one last thing, if you're one of the 11% of FCA authorised brokers who's thinking of jacking it in because you've absolutely had enough, then just leaving completely, give me a call, because we're getting a large number of people now who are saying, I've been doing this 30 years. I've not had a complaint in God knows how long, but I'm being expected to do things as if I was a multinational corporation from the FCA, and I've just had enough. If you're one of those, then give me a call. We can help you to still earn income, and you could be semi-retired or even fully retired. I've got one guy who did exactly this back in 2022, and he's earned more money since than he was earning previously when he was fully employed. So it just goes to show that you can still earn a decent living from this with very little input. So just give me a call. I'm hoping that our first speaker's got some connectivity problems, and my mouse is moving around like frantically at the moment. So I'll try and make sure everything's okay. So the first presentation is about to start. If you to get yourself comfortable, there'll be a 5-second or just gap whilst we get the first presentation on. Right, okay, so, she is in the room, excellent. So I can start talking now. So our first presenter is Pauline Rylands from West One Loans, who's presented now with us many times, and she just appeared in the corner of my eye. Pauline, can you hear us? Pauline? Pauline, can you hear us? We can see you, I can hear you too, but you can't hear me. Okay, Simon will sort out whatever the issue is. So I'll just go through your introduction very, very slowly. Okay, so you should have received on your email this morning, there will be the quick criteria guide for West One's first charge residential, and also their product guide, which came out, I think it was the 25th of July. Then actually, I'm just trying to think if there was maybe a more recent one that I can't remember now, but I think maybe that is the most recent one. So a little bit about Pauline. She's worked in financial services industry for more years than she cares to remember. Prior to West One, Pauline was the area manager for a high street building society, where her time varied from dealing directly with customers to looking after brokers and supporting them and their clients. Pauline has worked for West One for over 5 years, and with the MD, Marie Grundy, helps to run the first charge residential and second charge side of the business. In her downtime, Pauline loves spending time with her Romanian rescue dog, walking her and trying to stop her biting every person she comes into contact with. And Pauline, can you hear us now? Pauline? No, she still can't hear us. Pauline? Okay, so I have to do your introduction very, very slowly now. Oh, sorry, your claim to fame. Just loved it. So Pauline's claim to fame was that she was once an extra in a film called Going Off Big Time, starring Bernard Hill, who was in Boys from the Black Stuff, I believe. Okay, the comedian.
Quick, hang behind me.
I tried to find any pictures of Pauline online, but there wasn't anything at all. So Pauline, can you hear us?
Oh, it's like one of those moments.
Pauline, no, nothing. Okay, well, we can hear you. I think we can hear. I can hear you. I can hear you perfectly. So what I'm going to do is, how do you do this on computer? She probably can't lip read. Do you want to go ahead?
Hi everyone. I don't know whether you can hear me, but unfortunately, perfect, fabulous. Sorry, I can't hear a word, so I'm hoping it will write itself as we go along. Thank you for your time today. My name's Pauline Rylands, and I know Tony will have done a fantastic introduction. I have worked with, I'm head of specialist distribution, so I look after our packager arm. So Tony and his team fall under my remit, and I look after first and second charges. So today I'm here to talk to you about our first charge proposition, which is available through, obviously, Tony and his team via the specialist hub. So a little bit about West One. Basically, West One was founded in 2005. We were a bridging lender. And since then, in 2017, we decided to broaden our horizons when we basically moved into second charge lending. 2019 saw us move into buy-to-let and to development finance. And then more latterly, October 22, we moved into the residential market. Now, all our products, as I've explained, are available through Tony and his team. And the whole proposition that we have means that hopefully we can take your clients through each stage of their property transaction. Okay, so West One, why work with West One and the team, Tony and his team? Well, basically, we are a lender who has a very unique approach to credit risk. We have a bespoke way of looking at things, and we tend to look at your cases holistically. One of the big things for us is that we don't credit score. So I'll talk about that in a little bit more detail as we go along. But basically, we're a lender who listens. And, you know, when any of our broker partners have any criticisms or any great feedback, we take that on board and we act very quickly. If I look at our first charge proposition as it was in October 22, it's completely different now. So any feedback that we ever receive that you would give to Tony and his team, it doesn't fall on deaf ears. We absolutely try and make changes as we go along. Okay, so as I said, these are the products that we offer. Bridging is our baby, I suppose. Buy-to-let, development finance, second charges, and our residential mortgages. And in a nutshell, we lifted our second charge proposition and put it into first charge residential. And that in itself brings a lot of unique, USPs that you will find are very different to any lender on the high street. And that's basically what I want to cover with you today. Okay, so opportunities in the specialist market. Well, current economic climate. I know things have kind of settled down quite a bit this year, which is great to see, but we still have uncertainty going on. Every week seems to bring something different. And as we saw, a slight rise in inflation yesterday, and swap rates as a result of that tend to go all over the place. So more and more, whilst high streets are starting to come back a little bit, it's still the world for specialist lending. We also have products and criteria that is designed for when the high street says no to your client, and we're more than happy to pick that deal up. So there's always a place for majority of clients, if not all of your clients that you have. What you have seen, and it has remained, is that the high street has really tightened up on its lending criteria and affordability due to the uncertainty that we've faced over probably the last 4 years, 4.5 years now. One of the things that we are seeing on second charge and on first charge is that debt consolidation is prevalent. Whilst we have seen, thankfully, aspirational lending is coming back, unfortunately, there are a lot of people out there who are still struggling, and actually that aspirational lending still comes with an element of debt consolidation. So it might not be the primary reason for their loan, but it absolutely helps them out and helps towards affordability going forward. We also look at underserved borrowers. So, and two that would like to kind of put out there is your older clients, clients who might be on an interest-only mortgage or looking for other options to consider. We've seen lots of those, but also self-employed applicants. And when I go through my presentation, you will see that will become obvious as to why we can help them. Okay. So our proposition overview. So from an affordability perspective, I kind of put our proposition into 3 categories: affordability, adverse, and our legal service. And those 3 things together really will help the majority of your clients. From an affordability perspective, again, we talked about the bespoke. I mentioned the bespoke things that we do. Affordability is definitely one of those. You will be used to a traditional I&E assessment of a client. That's not what you get with West One. Our affordability is automated assessment, which means that Tony and his team will have clarity and confidence at point of sale as to whether or not that case passes or fails. It also means that we can look at near fails, move things around slightly, potentially extend term, and that can all be done at the very start of that journey. We also have borrowers for options for borrowers who are looking for flexibility around LTI. Our LTI is 5 times income at the moment on our standard plans, but we do have products where we can go way beyond that. And also we have no debt to income ratio. And that's where a lot of the deals, we do pick up a lot of deals that High Street just won't look at because they completely fall out of criteria for that one issue. You've got sea greens on the credit search and basically on the credit report, and that client has not missed a beat. They're the clients that we're really starting to pick up. We've also got a very manual approach to underwriting. As I said earlier, we don't credit score. So we don't have a system that basically says we don't want to look at this client at this moment in time. Our personal approach towards underwriting, we've got in-house underwriters. They're all office-based. And the big thing is that you can actually pick up the phone and speak to them. Also, our criteria, because we have that bespoke approach, because we can look at your deals holistically, we can look at deals that fall outside of criteria. And that is via our broker support team. And our broker support team will look at deals at the start of your journey and help Tony and his team with that. And we also have niche criteria, and we focus on product innovation. As I said earlier, we do listen to your feedback. And if there is anything that needs changing, we'll absolutely do our best to do that. Our on-site legal team. So we work with Graphene Law in England and Wales, and we work with Wilson McKendrick up in Scotland. And that means that we have exclusivity through Graphene. Very easy for me to say this morning. Our legal approach, we basically we indemnify wherever we possibly can. And also our solicitors are instructed day one. Majority of lenders you will find won't do any legal work, will not commence basically until the offer has been issued. And that causes loads of post-conveyancing issues. We don't do that. We basically issue, we instruct day one, and that means that when it comes to offer, the case is pretty much ready to complete not long after. We also have a fast track legal service, £99, and it's for basically all remortgages, including unencumbered deals. It just excludes transfer of equity or paying off a bridge. But basically anything, any normal remortgage up to 750,000, and it can include capital raising as well, can be done on our fast track legal service. It's basically the same as a second charge legal process. So it also means that it puts the remortgage deal back in the hands of your client. They can decide when they want to complete. And we have seen deals, on average, it's about 11, 12 days between offer and completion when you use Fast Track. But we have got deals where basically you can, we've had it in and out and completed within 4 working days. It can be that quick. And as we know, when I talk about debt consolidation being prevalent, that is the difference between keeping things looking good as far as their credit profile is concerned, or it all going horribly wrong. When it comes to debt consolidation, we see it with second charges all the time. Your clients are in, speed is of the essence in that respect. Our proposition is very service-led. We want to speak to you. So Tony and the team will know that if they've got any issues on any of their cases, or if they just want to chat something through and clarify anything, you've got our broker support team at the beginning. And then once it comes into the office, you've got a dedicated underwriter that they can pick up the phone and speak to. So not only will Tony and the team take away the pressure and the problems for you guys so you can get on with your normal day-to-day work, but basically they have got that direct contact with us as well. And that really does help to kind of speed things along. We will call Tony and his team to go through the needs update day one, and that helps us to understand the deal a little bit better. And then basically we work together to get that deal through as quickly as we can for you. Okay, affordability, just a little bit more on affordability because it's so important. The deals that we are doing for clients, we've seen some really high net worth clients that we've been able to help that have fell out of high street for the silliest of reasons. Could be slightly over 4.5 times LTI. But yeah, lots of things that we are, we've basically been able to help people with. Our affordability is based on net income. And in the background, it's household composition, ONS data that sits in the background, and then net income. Now, our ONS data is not regionalised, so anybody from the south is not going to be penalised. It's basically ONS data that cuts across the whole country. It also means that when the guys at Specialist Hub put your deal on the system, they are able to know whether it's passed or failed, but also to know how much it's passed or failed by. So able to do something with those narrow fails and to kind of feed back to you, if we think about this, if we think about that. And also we can exclude financially independent adults, and that includes married partners or cohabiting partners. As long as they're earning £600 net income, we're happy to exclude them from the household composition altogether. That is also therefore a home for anybody who's got a partner or husband or wife who's basically got adverse issues. We don't see any of that. So, in those instances, the profile and the product they can have depends on the applicant themselves. Not on anything to do with anybody who lives with them. We can also use 100% of regular and consistent overtime, bonus and commission. Whether that be monthly. What we ask there is that the clients have been in the job for 12 months, so we can see that consistency. And we will base that income on the net year to date once we go past June in the financial year. And we can also use 100% of annual bonus and quarterly bonus, as long as we can see it backed up by a previous P60, which shows that it's regular and consistent. We can look at using that income. Second jobs, 100% of a second job if they've done it for 12 months. But we can consider by referral anybody who's been in that role for only 6 months. Totally appreciate, this is one of the big changes we've made, totally appreciate that lots of people do have that second job now. Also, we will go up to a maximum of 60 hours, where a lot of other lenders will kind of really 50 is their maximum. Any child-related benefit for children who are 12 and below, so as long as they've not hit 13, we're happy to use that income. And not only will we use it for up until a certain age, we will use it for the full term of the mortgage as well. Our approach to LTI, like I said earlier, 5 times income is standard across all our plans, including our higher LTV plans that go up to 90%. But we do have products on our Prime Plus core range, and that includes first-time buyers as well. And as long as they have household income of £50,000, we can look to go beyond 5 times income, and there's actually no cap on that. So as long as it passes affordability, those clients can basically come to us and they could have 8 times income if it fits. Also, again, another reminder, we don't have a debt to income ratio. So all those clients that you're looking for a home for, because they've racked up a lot of debt, we can basically help them out. As far as general income criteria, interest only, it is truly, the affordability is stressed on an interest only payment. And debts consolidated, we will consolidate those directly. It's a £35 transfer fee, and that doesn't matter how many items of credit the client has. We can basically clear every single one of them for them. And that means it's not taken into account for affordability. You're not having to worry about a conditional offer, and you're not having to worry about solicitors having to pay them off either prior or on the day of completion. We sort all that out. So it's a very simple and easy process. Our standard term is 40 years, and we can take a client all the way up to 85 on a repayment basis. And also for clients, it's worth mentioning, for clients who are more than 10 years from retirement, we can, and they're paying into a pension. So somebody perhaps who's going to retire at 70, they're 59 now and paying into a pension, we can use current earned income right the way up to age 85. And that in itself is a very unique proposition. Bank statements, we tend not to be required. We just need filtered bank statements to back up the pay slip. So just 2 months worth of filtered bank statements to verify the pay going into the bank account. And that's it. Okay, employed and self-employed. These are massive highlights. So for a client who is employed, we need them to be in their current job for 3 months. And it doesn't matter if they're in probation. We also don't look at the previous history. So we're not bothered how many jobs they've had prior to this 3 months. It doesn't matter. We also don't need 12 months history. So a client who is with, literally had a break for whatever reason, now back at work, 3 months, even if they're in probation, a 6-month probation, we will look at a loan, doing a loan for those clients. Obviously, we're only going to take into account basic income in that situation. If you've got a client, however, that's been in their current job less than 3 months, they're not in probation, and they do have a previous track record, then we can look at that by referral. So again, another example of where we can be very flexible. 0 hours contracts and agency workers, we will look at generally when they've done the job for 12 months. So we get lots of these. I had a query yesterday. So again, just pick up the phone and have a chat with broker support about that. Employed contractors, there's no minimum time now on the contract. So if it's a fixed term contract, we used to need 6 months remaining or proof it was going to be renewed, and we've removed that. And for day rate contractors, we used to ask for 3 months left on the contract, and again, we've removed that out of the scenario. As I said earlier, 100% of bonus, commission and overtime, so that really does help. And also the second jobs. Now, self-employed, we use, to verify income, we use SA 302s and tax year overviews. We don't need accountant certificates, apart from if the loan purpose for a client is for business purposes. That tends to be the only time we ask for it. We are still currently using 22-23 figures, and we very rarely ask for projections or bank statements. Well, we certainly don't ask for bank statements for self-employed. The only time we might ask for a projection, because also we're working on the latest year as well. If you've got a client whose 21-22 figures are looking at £10,000, 22-23 is 50. As you can appreciate, we're about 16 months, 17 months out of the tax year, or they're kind of 16, 17 months old now. Then if that's only passing by £10 and that income was 50,000, then in that situation, we would likely ask for a projection just to give us some comfort. But again, we're not going to ask you for bank statements in that scenario. We ask for 2 years minimum trading for our top range, so our Prime Plus range, including higher LTV. But we do have products, so our Prime and Near Prime product, where clients, if they've only got 12 months trading, we can absolutely look at a mortgage for those clients. So you can see how underserved they are by the high street. It's not an issue for us. When it comes to the SA 302s and tax year overviews, I've kind of given a flavour there of how we would assess income. Limited companies, we also don't need, as the norm, an accountant certificate. And for any directors who have got at least a 50% shareholding, we can consider using net profit instead of salary and dividends for them. So again, speak to Tony and the team about that. Okay, UK nationals, non-UK nationals, sorry. So we would like any of our applicants to be in the country for 12 months, pretty standard. Now we can actually look at non-UK nationals who have got a skilled work visa. So we're kind of talking it would have been previously a tier 2 visa. And it also stretches out to health and care worker visas and the UK ancestry visas as well. We're not looking at what's it called? Can't think of the other visa, but basically we're not looking at a married visa. It is literally those three that we are looking at the moment. We would like the clients to be in the country for 24 months. And again, it's just that little bit different to what High Street will consider. And obviously, you know, they're the type of clients that we will look at. We need to evidence for EEA nationals that they have got settled or pre-settled status. And also, our products are available to all of those clients, including non-UK nationals on visas. They can go up to 90% loan to value at this moment in time. As I said, non-EEA nationals need to be in the country for 12 months and they either have permanent rights to reside or indefinite leave to remain. And like I say, up to the maximum LTVs there. So again, something quite different. Impaired credit. So we, as I said before, we don't credit score. So, you know, we can look at you. What that means is we look at your clients holistically, but also the client's credit profile determines which product they can have, which you will be able to see on our rate card. The plan, we do a soft footprint at dip stage. So again, you're not impairing the client's credit profile by doing that. And also, we will ignore comm suppliers and public utilities across all of our plans, regardless of what's happened to them. With regards to CCJs and defaults, satisfied CCJs under £500 are ignored for plan purpose. And even outstanding CCJs up to £500 are ignored for plan purpose. What we say is anything over £500 would be accepted on our higher LTV plan and Prime Plus as long as they were registered more than 2 years ago. We don't have a maximum number or a maximum value of CCJs and defaults. All I would say is have a chat with Tony and the team who will chat it through with us. It could be that we ask for those CCJs to be repaid with the loan proceeds. It's very unusual for us to do that, but I've just had a deal in where they've got £50,000 worth of CCJ sat in the background, and we have basically said we offer to pay that for them and out of the proceeds, so they borrow a little bit more, but it basically will tidy up and clean up that client's credit profile and will help them in the future. Okay, unsecured and secured and unsecured credit. So basically, late secure payments, as long as they've been paid within 30 days of the due date, we're happy to consider those as late. So we can basically look at those deals for your client. Missed or late payments for unsecured credit. If the balance is currently under £500, it's ignored. Even on our higher LTV plan, even if it's gone down 6 months ago, if the balance is below £500 today, it will basically, it just doesn't look at it. It's fine. Also with ourselves, you can have 15 lines of credit that have basically had missed payments throughout the last 12 months. As long as either the balance is below £500 or they haven't gone above a status 1 on our higher LTV plan, then basically they can have our best products. A lot of lenders out there, it's one or across 1 or 2 of the lines. But like I say, it could be around 15 lines of credit. All as we say is we're going to ask for a suitable explanation in that situation, as you could possibly, would obviously understand. On our Prime Plus range, we will allow 2 unsecured payments to have gone down a status 2 in the last 12 months. And on our Prime range and near Prime range, basically Prime we accept they can have any level of arrears as long as we're clearing that debt if it's currently in arrears. And as long as we're putting them into a better financial situation, which obviously is going to form part of your advice. With regards to debt management plans, again, we can look at clients who are currently in a debt management plan on our near prime product, and we will look to pay that off. There would be no other form of capital raising with that, but we can basically look to clear off any other debts at all. Anybody who's had a DMP and it's been discharged more than 2 years ago and conducted satisfactorily, then we would look at that on our prime range. So again, better rate for those clients. Okay, so bit of useful criteria. So buy-to-let properties in the background, there's no maximum number of them. We don't need ASTs, we don't need land reg. Basically, it's a simple process. We just want to see a sample of them on the credit search. And as long as they're, in effect, washing the face, as long as the mortgage payment is more than the rent that they're receiving, then we're absolutely fine with that and we can exclude. I said earlier, we can have look at married cohabiting sole applications. And also we can ignore them from the household composition as long as they can prove that they're earning £600 net. Clients who are separated, it's a really simple process. There's no ILA, there's no deed of separation. We just want comfort that they're not living in the property any longer. And gifted deposits also accepted from close family members. So parents, brothers, sisters, that kind of thing. Capital raising as well for most legal purposes, right the way up to 90%. We can consider business purpose and basically debt consolidation, which again, you can imagine High Street just shy away from that completely. We can also consider tax bills as well. We say if it's only 1 year, it doesn't need referring. More than 1 year, then basically give us a shout and let's have a chat about it. AVMs as well. We've now improved our AVM criteria. So basically, we're in a position where we can go up to £300,000 loan size, and that includes transfer of equities and unencumbered deals, all the way up to 70% loan to value, and also with a property value of £1 million. Minimum property value is now being reduced down to 75,000, and we can look at loans up to 1.5 million as standard, but 2.5 million on referral. As I said earlier, a couple of things to mention about retirement. We take a standard, a retirement age of 70. We have moved, I'm calling it, in effect, a working age up to 75. But if you've got a client who is 70 years of age, going to retire at 70, but they're paying into a pension, they're only 59, we will basically look to take them right the way up to age 85. Now, working age, we've just moved up to 75. So again, if you've got clients who are looking to go beyond 70, who are maybe 61, 62 at the moment, we can look to do them a term right the way up to 75 using current earned income. So lots of ways we can help your clients there. So Tony, I know I'm going to run over, but I'm going to stop right now because I think that's a very appropriate moment.
Can you hear me? That's more important. Can you hear me? No, you can't. So this is what I've come up with, delegates. This is hopefully she can read that and it's not gone backwards or anything.
Of course I can. Yes, right, okay. Yes, we do have an affordability calculator. It's on our website. If we, the guys will be able to send you one over to look at. So it's quite in depth. It's very simple, but it'll give you maximum borrowing as well. Chat messages, text. Okay. Sorry.
I'm hoping she's actually, I sent her a text with the questions she set herself because they were sent over some time ago, so I'm not expecting she'll remember them. But hopefully she can get her, I sent on her phone text.
Okay, I think I've got it. Hang on.
This is the first time for us, by the way, this has happened, that the speaker hasn't been able to hear anybody else. Wonders of technology, eh?
Okay. Right, I've got it. So in that situation, I've just been asked by John Emin, are we able to help mortgage prisoners paying high standard variable rates but adequately servicing repayments and not requiring further borrowing? I'm assuming you're looking to somebody who wants to remortgage in that situation. If they're looking to remortgage, absolutely, we can help those clients, not an issue at all. Okay. Right. Employed applicants who are in probation period, yeah, absolutely. As long as they've completed 3 months with the current employer, they can be in a 6-month or a 12-month probation, not an issue for us at all. So self-employed income is basically using SA 302s and tax year overviews. So what we will look at for directors who've got 50%, minimum 50% shareholding in the business, we can look to use net profit for those applicants. So we'd obviously need to see their accounts in that situation. They're by referrals, so you'd refer them through Tony over to our broker support team.
I think we call it down.
That's it on the questions.
I'm holding it up. Thank you, Pauline.
Okay, thank you.
Very awkward. She can't hear a word of what I'm saying, unfortunately, even though everyone else can hear her. So we're done. Yeah, she's gone. Okay. Right. Well, I wasn't expecting that one. Of all the things that can go wrong, that's a new one on me. So hopefully that'll be the only time that happens. So we are now hopefully on. We've got the slides for our next. No, we haven't. We haven't got the slides for our next one. They've just come up. Okay, so our next speaker is, hopefully this will work. It is Rhys Evans from Shawbrook Bank, who, despite his Welsh name, is an Essex boy, as you will realise in a moment when he speaks. There he is.
Morning.
Can you hear us?
I can hear you loud and clear. Can you hear me?
Marvellous. Yeah, absolutely. Yeah, we couldn't hear the previous, or sorry, she couldn't hear us, which made things very difficult when I was trying to ask her questions. Right, okay, so I'll just start with your little bit first. Okay, so you can send a product guide this morning via email, everybody. So have a quick read of that as and when you can. A little bit on Rhys. He began his career at Shawbrook as a second charge underwriter before moving to another lender to expand his expertise in the buy-to-let market. He gained valuable experience in assessing complex lending scenarios, which he now leverages as regional development manager. In his current role, Rhys is dedicated to fostering strong relationships with Shawbrook's broker partners, delivering innovative funding solutions to their professional investors while supporting brokers' ambitions for business growth. This is the bit I like. When he isn't busy at work, Rhys enjoys cheering for West Ham. That's the first one person we've had present who's a West Ham supporter. As am I, Rhys. You didn't know that, did you?
There are some of us. I'm one of 10.
Yeah, exactly. Probably a season ticket holder as well, I would imagine, judging by this. So bringing the same energy and enthusiasm to his job as he does to support his favourite football team. Marvellous. I'm really pleased about that. I really am. Okay, interesting fact. He didn't have a claim to fame, so he just gave us an interesting fact. He's an avid fisherman, as am I, Rhys. You probably didn't know that either. Who loves spending his weekends outdoors, finding both relaxation and excitement in the sport. I love my fishing so much that I actually bought a house beside the canal.
Did you really? There we go. I think we need to have.
It wasn't the only reason, obviously, but it wasn't purely because that's a house full of kids at the time as well. But that was a big selling point for me. It was literally 30 or 20, 30 yards from the canal. So
yeah, beautiful.
I could be fishing on the canal bank. My wife can bring me out a glass of wine. How about that?
There you go. It's perfect.
Not 6 a.m. Right, over to you. I'll see you in about 20 minutes and good luck.
Perfect. Good morning, everyone. My name's Rhys. I'm a regional development manager at Shawbrook Bank. Now, what am I going to cover today in regards to Shawbrook Bank? Well, I want to give you a bit of an insight in regards to who we are. Many of you have probably heard of us, but some of you may have not. I'm also going to mention and run through a few trends that we're seeing in the market, as obviously data is key in our current market, and the trends that we're seeing are, in some instances, trends potentially worth following for you and your clients, recent changes, and also why via Specialist Mortgage Hub, our criteria and our solutions can help you and your clients. So let me get on to the next slide. So in regards to an overview of Shawbrook, we are a specialist UK lending and savings bank. Now, what does it mean in regards to UK lending to start with? Well, we're actually a franchise style bank in regards to we actually also own some other lenders, in case you didn't know. So lenders such as Bluestone, obviously they're pretty big hitters in regards to the specialist resi market, but also lenders such as TML, we actually own them. So obviously them lenders there kind of cover the residential and standard buy-to-let proposition, with obviously some specialist sort of covering with TML, and Bluestone obviously really goes sort of hammer and tong at your real specialist resi lending. So that's covered. my sort of job at Shawbrook Bank and what we generally cover is the wider UK specialist market in regards to your real quirky and your real specialist cases. Now, as a bit of an insight, Shawbrook Bank only work with a limited panel, and the specialist hub have access to that panel. They're also experts in our criteria, and we've worked with them for many, many years in relation to building that strong relationship. So all of the products and all of the criteria I'm going to mention to you today and the solutions provided are all available through the specialist hub. In regards to some recent news you may have seen in the press, Shawbrook's loan book has grown by 15%, which is 14.3 billion. We've also gone into the SME market as well as the healthcare market, so we're an extremely diverse lender. In regards to what I want you to get from today, the key point that I really want you to get is that Shawbrook are a safe pair of hands. And there's various reasons for that, but a lot of lenders jump on, they obviously have very secure access to funding. Where Shawbrook are funded via retail savers, the money that we actually lend is the money that we can control as such. So the thing that I want you to get from today is in regards to how much of a safe pair of hands Shawbrook are in this current market. Now, we've had some good news obviously recently in regards to the base rate reducing, but there's still some choppy seas ahead, and we're still not out of the woods yet. So in regards to sort of Shawbrook being a safe pair of hands, there's a few slides that are really going to highlight why that's the case and obviously why you can depend on us as a lender. So moving on to the next slide, your go-to lender for property finance. It pretty much says it all on this slide, really. Now, if I can focus on the tick aspects of the slide in regards to what we currently offer. Now, we offer complex solutions for buy-to-let, bridging, commercial investment and development finance. Now, as a regional development manager, the aspects that I cover are buy-to-let, bridging and commercial. We actually have a bespoke development team that can obviously help you through or help the specialist hub in regards to more of the complex inquiries, because we do believe that with development, you need someone that's an absolute expert in it. And we have regional managers that can help you through that. So today, I'm going to cover buy-to-let and commercial investments. Bridging is going to be left to a later date. So in regards to buy-to-let and commercial investments, I'm now going to run through a few trends that we're currently seeing in the market. So in relation to trends, so there was some previous slides on a previous presentation from last year, and it commented to say that 23% of landlords were looking at selling assets. Now, these landlords weren't looking at selling assets because they were worried about the market or they were looking to completely get out. It was actually the opposite. They were streamlining their portfolio and selling assets that weren't performing in regards to cash flow to buy better ones. So they still had full confidence within the buy-to-let market. They just diversified the kind of properties that they were purchasing. So what have we seen here at Shawbrook? Now, HMOs are making up an increasing percentage of our buy-to-let business. As you can see on that June 2024 stat, HMOs made up a third of all buy-to-let business written thus far this year. So we can really see in regards to why landlords are pushing down that HMO route. Yes, they do come with more regulation and it does come with more rigmarole. However, the cash flow and the yield aspect from HMOs has been a really attractive proposition for your landlords and our landlords, particularly moving forward. There's various products, obviously, that I will mention at a later date in regards to another presentation as to why we excel from the HMO perspective. Our bridging and our light refurb proposition really aids the conversion of standard lets to HMOs. Now, we'll cover that later, but you can see why our loan book has grown in regards to HMOs, because we've got extremely complex criteria which provide solutions for your clients on buy-to-let, but we've also got the means to provide them with an upfront product to help them convert these assets into HMOs. So that's the trends we're generally seeing on the buy-to-let front. Now, you're probably sitting there thinking, why would you work with Shawbrook? Now, I mentioned already that we're a safe pair of hands in the market, and I will break that down. But also, we've got some great technology in the background in regards to PEXA. You may not have heard of PEXA, but it's an Australian conveyancing software, and that enables us to basically complete our buy-to-let deals in practically bridging speed because they've streamlined the process. We all know that land registry can be a pain in the backside or is a pain in the backside at certain points, but that PEXA software really helps. My Shawbrook, our portal, as a specialist hub will know, is very, very slick, and it helps them because you don't want to have a complex inquiry and also have a complex portal to deal with. You obviously want it to be as swift as possible. We are a large loan lender, and I will break down the changes we've made to help you and your large loan clients. But we can obviously lend up to a client up to 35 mil with creative funding solutions. So 35 mil, you'll notice a lot of the lenders out there cap out of 3 or 5 million, whereas we sit there and go to market with that 35 million pound max level. We have got simple but broad lending criteria, and I will break that down. And for selected properties, we can obviously get creative in regards to how we instruct the valuer to value these assets. Now, the one thing that I want you to know with Shawbrook is we try and be as competitive as we can, but I wouldn't look to Shawbrook as a rate-driven lender. There's plenty of other lenders out there if you're looking to obviously rates. But what I would look for us for, as I've already mentioned, a safe pair of hands, but also having that complex criteria and the capability to actually get the deal done without moving goalposts is where we're really strong. And I will break down some reasons why that is the case. So in regards to some changes, now I mentioned earlier that we lend up to 35 million. We've realised that there's obviously a huge opportunity within this market as there are some extremely large landlords out there. So Shawbrook Bank are a bank that's constantly growing. I mentioned earlier that our loan book has increased by 15% and by 14.3 billion. Therefore, with that, our teams also need to grow and our proposition needs to grow in line with market demand. So what have we done? We've realised that the larger loans need more of a hand-holding process, and it's not that the brokers aren't experienced or the introducers aren't experienced, but they're big loans, right? There's a lot of moving parts and there's a lot of things that can potentially go wrong with a large loan process. So that's why we've introduced a structured real estate team. These are experts in larger loans, experts in structuring the bigger ticket stuff, and they can really hold your hand as a specialist hub and your client's hand through that process. And obviously, as the brokers that are introducing specialist hub, you want your clients to be looked after in the best way possible, and you'll get both of that with the specialist hub and ourselves as the lender. So a pragmatic use of AVMs within this structured real estate team, and this is for new to bank lending, £2.5 million on bridge and £5 million plus on term lending across buy-to-let, commercial and bridging. So yeah, the real hand-holding team is starting to really help. We're doing some great stuff on that side of things. So in regards to buy-to-let mortgages, now I want you to think of Shawbrook as complex borrowers and complex clients and complex solutions, in regards to property. Complex borrowers and complex clients are the same thing. Sorry about that. So in regards to complex borrowers, now we realise that obviously a lot of people are watching programs like Homes Under the Hammer and things such as that, and they're on Instagram, they're looking at all these property investment gurus, and they're sitting there thinking, do you know what? I think it's time. I've got a bit of money saved and I want to get into property. Obviously, the stock market is attractive and index funds are attractive. But obviously, in regards to property, you've got something tangible. So they're looking to get into that industry. Now, in relation to that, we've obviously seen the opportunity. So we lend to first-time landlords within that space. So we lend to first-time landlords for small HMOs up to 6 bedrooms and small MUFBs up to 6 units. Now, Tony, just quickly, I'm well aware my video keeps freezing. Can you hear me clearly? Cool. You can hear me clearly. That is absolutely great.
Yes.
Brilliant. Thank you. Also, we lend to expats. So obviously, we realised that there's a lot of attraction in regards to moving abroad, and there's a lot of incentives, such as countries like the UAE, where there's a tax-free environment up to a certain amount of income. So we're well aware of, obviously, there's a big demand for expats. Now, we're more than happy to lend to an expat. The criteria caveats are that they just need one buy-to-let, UK buy-to-let property, and have held that for more than 12 months and 50 grand worth of income. Now, generally speaking, if someone's moving to somewhere like the UAE or other parts in Europe, £50,000 worth of income across the application, so that's across all clients, is quite an easy achievement to make, basically. There is a slight rate loading with that, as obviously we've got a price in the fact that there's the risk that they're not UK based, but yeah, we're more than happy to lend to expats. Now, foreign nationals, there's a reason why I put UK based next to it, and that is because generally speaking, as a rule of thumb, we can lend to foreign nationals. We can lend to foreign nationals on obviously spousal visas and temporary visas, as long as there's a reasonable amount of time left on their visa and they've been in the UK for 12 to 24 months, that's fine. In regards to foreign nationals living abroad, as a standalone applicant, we cannot lend to foreign nationals living abroad. However, we can lend to foreign nationals living abroad if there's a UK-based investor on the application with them. So if you've got a client where there's a UK-based investor, they've got experience and they're also a part of the SPV, more than happy to lend to non-UK-based foreign nationals as long as we've got that. People are starting to get incredibly creative in regards to how they structure the deal in regards to from a taxation perspective. So what we're seeing a lot of is we're seeing a lot of applications coming in the way of SIPs. Obviously, SIPs are assets held within a pension fund. So we're more than happy to lend to an asset in a SIP as long as it's above 1 million in loan value. Trust ownerships, another clever way in relation to tax. We're more than happy to lend where an asset is owned via a trust. As long as we can see who the beneficiaries are at the top and who the trustees are, and we can obviously get them on the application and we can get comfortable with them, more than happy to lend where there's a trust structure involved. Once again, £1 million loan minimum. Now, layered corporate structures. Now, if you was to go to the market, there's obviously a lot of lenders that have changed their criteria in regards to layered corporate structures. And what I mean by that is it's quite common with development businesses. They'll have a development company that builds the properties and then they'll split it into subsidiaries in regards to when they're looking to retain the assets. Now, you need to speak to a tax advisor, but there are some taxable benefits in regards to the holding companies and additional companies sitting on top. Most lenders probably sit at around 3 layers as their maximum amount. We've got an unlimited amount. As long as we can see who the ultimate beneficiaries are at the top and we can get them on the loan, that is fine. Another thing we've introduced to the market, and this is an opportunity that we generally see will come to a lot more fruition moving forward and will be increasingly more popular, are share purchases. So this is where the client purchases the SPV instead of the assets. So they kind of purchase the limited company, which includes the assets, rather than obviously going out there and buying the properties individually. Now, the government recently got rid of the relief for the multiple property stamp duty. So obviously if a client was going out there and buying 6, as an example, I can't remember exactly the figure, but if a client was going out there and buying 6 properties all at once, they'd get some stamp duty relief. Since that has been abolished, we do believe that the share purchase option could be more and more popular. Now, when it comes to share purchases, it does obviously then there are some caveats. It isn't just a straight, we lend on share purchases regardless. It has to be at open market value. It has to be a UK-based SPV with no offshore links. And also, obviously, the accountants and solicitors need to ensure that the business is whitewashed from a taxation perspective and that there's no nasties hiding within that transaction. But more than happy to consider them applications, and there's no minimum loan in regards to that. So, more than happy to accept share purchases. So in relation to complex assets, I've covered complex borrowers. So complex assets. Now, I'm going to tell you how we do things differently to other lenders. I'm not going to tell you how we match them because obviously you can research that yourself. And what's the point me telling you somewhere where we don't differ? So flats above commercial premises. You might sit there and go, Rhys, there's loads of lenders out there that do flats above commercial premises. What's different there? Well, we actually do flats above fast food and takeaways. And there's no LTV restrictions in regards to that as well. There's plenty of lenders out there that will do flats above takeaways, but you might be looking at 60 to 65% when it comes to the LTV bandings. Subject to valuers' comments, we can lend up to 75%. There's no restrictions. In regards to multi-unit blocks of flats and MUFBs. So traditionally, most lenders go up to 10 units on MUFBs, and they might cap the LTV at 70% due to obviously risk approach. Now at Shawbrook, we've got no maximum in regards to how many flats can be on the title. Obviously, any flats above 10 units, we will take investment value, so we will take block value. However, this is a real nice USP with Shawbrook. If the flats are above 30 square meters, the amount of flats does not exceed 10, and they can all be sold within 12 months, we can actually take up the breakup value as the valuation. So most lenders will look at a 10-unit MUFB and go, investment value all day long. If we was to repossess, we'd have to sell them all at once. So we're going to get the value to knock 10 to 20% off in line with how the valuer feels fit to value the property. You don't need to do that with us. So there's numerous property investment shows that as a BDM I go to. It helps me obviously learn trends and what's going on out there, but also some of the brokers are there, so it's really good to catch up with them. Now, one thing they were selling was buy a block of flats at investment value, split the leases and refinance at breakup value, therefore increasing your leverage by 10 to 20%. With Shawbrook, if your client buys a block of flats at up to 10 units on a bridge at auction, they can refinance on open market value and breakup value, subject to the things I've mentioned. So it's something that obviously I want you to remember. HMOs. So a lot of lenders max out their HMOs at 15 to 20 beds. We have an unlimited amount of bedrooms for when it comes to HMOs. There's no maximum with us. Now, in relation to that, we can also take guaranteed rent for when it comes to HMOs. So a lot of lenders would like an AST, and that is because obviously from an AST perspective, it helps them if they was to ever repossess. However, at Shawbrook, we kind of have the view that guaranteed rent's good. It means that our client, the probability of our client defaulting within the next 5 years is low. So we're more than happy to take guaranteed rent. I'm going to tie in the bottom bullet point in relation to that HMO point, which is properties let to vulnerable tenants. We've recently gone out to market with some more clarity in relation to what we are happy to accept when it comes to vulnerable tenants. So a lot of lenders out there, they're not big fans of vulnerable tenants. And I'm not sitting there saying that we can do absolutely every vulnerable tenant type. We can't. So the ones that we can't do are Serco linked, MERS or Clear Springs. And that's not because of the kind of tenants they house, it's the kind of leases that they have in relation to. We generally can't get comfortable with a lease because it doesn't give us sort of maximum benefit and rights in regards to if we was to repossess. But everything else in regards to social housing, local authority leases in relation to vulnerable tenants, recovering addicts, homeless people and things such as that, the underserved in the community, we're more than happy to lend to vulnerable tenants. Even people with assisted living, so people with daycare, we can lend to. The only time we can't lend is when there's overnight care or if there's minors within the security. But I do encourage you to have a look at our criteria, speak to Specialist Hub in relation to that criteria aspect and just cross-reference any vulnerable tenants you may have. I'm more than happy to check what type of tenancy there is and what type of tenants there are. So yeah, please feel free, if you do have any vulnerable tenants, to send it to Specialist Hub and they can liaise with us. Now, going back to that student accommodation, so we will lend on purpose-built student accommodation. It's a case-by-case basis, but obviously by that I mean we do have a huge appetite for it. We just need to check the overall scenario in regards to max leverage. Ex-local. Now, you might sit there and go, everyone does ex-local authority, big whoop. With Shawbrook, we have no minimum private ownership. So a lot of the lenders out there will require 50% at least. And where we differ is that we do not have any minimum private ownership in regards to ex-local authority assets. Investor-led assets are also something we can consider. They're not really favoured within the market, and if there are some LTV restrictions, but as long as the valuer says good things about them, more than happy to take investor-led assets. So that is complex assets on the buy-to-let front. So in relation to some case studies, now I want to try and bring to life how we've utilised technology, how we've utilised the correct teams to really provide a positive solution for you and your clients. So when it comes to the structured real estate team, as you can see here, I mentioned earlier, our new team has been, I call them the Avengers team for the obvious reasons is that they get stuff done on the structured real estate stuff and for the bigger loans. £20 million loan, refinance and capital raise. Now, 36 property portfolio. Now, obviously, we can lend, as I said, up to 35 mil. The property portfolio, we can lend on one application to numerous assets as long as it's held in the same legal ownership. But as you can see here, a £20 million loan and obviously refinance with some capital raise. Now, this was a real hand-holding bespoke experience. So as you can see here, you had the oversight from a dedicated senior regional development manager and a senior underwriter. So we really do get the best people involved on these deals in regards to giving them the best chance of completing. So yeah, a £20 million refinance utilising our structured real estate team. So I'd encourage you, if you've got any bigger ticket stuff, to just let us see it at least and let us see what's out there. So in relation to the next one, so this was a digital buy-to-let case. Now, our digital buy-to-let product is a product where we are offering more of a competitive rate. And this is simply because we generally want the more simpler buy-to-lets to go through in this product. So this is a product where it's standard structure, standard SPV, and small HMOs up to 6 beds. But you might be sitting there saying, what does digital mean? Well, this is completely AVM-based, utilising PEXA on the exit. So if you've got any clients with awkward tenants that are rejecting access to the property or anything such as that, or your client just wants to save money and go down the AVM route, our digital product is the perfect route for that. Our AVMs go up to 75%, therefore at least 5% more than most out there in the market, and our confidence scores and how we calculate the AVM is pretty decent on that front as well. And for the Specialist Mortgage Hub, it makes it easier from that side of things because they can see whether it fits on an AVM at ARP, so that helps hugely. In relation to the next case study, this is just an example of utilising PEXA, and this was really an absolute perfect case study in regards to how quickly we can complete. So as you see there, on the Wednesday, the case was submitted via Shawbrook. 4 working hours later, the offer was issued. Thursday, solicitors instructed. Tuesday, the following week, we had the completion with PEXA. So with this digital product and utilising PEXA, we can pretty much complete buy-to-let deals at bridging speed, which is amazing. So any urgent deals, please obviously kindly refer over. Ignore the loan term there. It's supposed to be 10 years interest only and not 10 months. I've just noticed that typo. So yeah, 10 years interest only, not 10 months. That is a term facility with from the buy-to-let side of things.
Rhys, I might have to stop you there. You've still got about another 10 slides to go. So you've only got 5 minutes.
That's fine. Yeah, no worries.
So if you want to get some questions as well. So I'll stay on, but I won't speak.
Yeah, cool. No worries. I do like to babble on, my friend. So thanks for butting in. That's all good. So that's the buy-to-let aspect, and that's the case studies there. Commercially, obviously, we're a huge lender in the commercial market. We've been lending in the commercial sector for absolutely years. Our actual origins were via commercial first. So we've been a commercial lender. We're well versed in this market, and we're hugely experienced. Now, in regards to what we offer and where we kind of differ, limited PGs, and this is across the board with buy-to-let as well. We only require your client to sign 25% PGs, and we don't request any debentures. We can go up to 75% on semi-commercial, 65% interest only on commercial, but there are some LTV increases for specific asset classes. So when it comes to assets we lend on commercial, it's pretty much easier to tell you the types that we don't lend on, such as pubs, clubs, religious units and things such as that. We've got a wide array of assets that we're more than happy to lend on, and it's pretty much listed here. Offices, serviced offices, complex commercial investments, and don't forget it can be mixed use as well. So if you've got multiple assets on one loan, we can put them all into one application and blend the rate for you and the client. One thing to note is for heavy industrial units, so as standard, 65% is the LTV max on heavy industrial units. On standard commercial assets. On heavy industrial units, we can go up to 75%. So it's a max leverage there. We've got huge confidence in that market. We believe the prices for industrial units are going to start going up. So I'm more than happy to offer that increased LTV there. So in regards to case studies, yeah, I don't need to tell you how to suck eggs when it comes to that. We lend in absolutely tons, and from that side of things, we don't grow the loan but by 14.3 billion without obviously having some competitive products and some competitive criteria. So switch and fix is the main thing that I really want to focus on today. So I'm quickly going to wrap that up. We have launched our product switch process. So it's an introduction into the product switch application and process. What we enable your client to do is if your client's coming to the end of their fixed rate period and they just want to switch and fix their products, they don't want to change the term, they don't want to leverage any more money, and nothing's changed in regards to the application, we can just switch and fix them into a new product, 110% DSCR, no valuations and no legals on that. So yeah, I do encourage you, if you've got any clients coming to the end of their fixed rate term and you just want to fix for a new rate, we've now got a product switch product. So please do feel free to get in touch with that. So I now will leave it up to the floor. I do apologize. I didn't quite realize how much I was rambling on. And yeah, any questions at all?
Okay, so we've got a few questions. So Steve has asked, will you lend to a church trust who own a property? He hasn't said what type of property. So obviously I know you won't lend on religious properties. If it's a church trust that owns a different type of property, then yes, we've done those before anyway. So Janek has said, I'm not quite sure the question. It said, was not take any more brokers on board. I presume that he's been told that you're not taking any more brokers on board. Like many lenders out there, Shawbrook have got only a certain amount of capacity for the number of brokers. if they were to deal with everybody, then they would never get a deal done, as Aldermore found out a few years ago when they decided to go out to about 15,000 brokers with their products, and then had people phoning them up, speaking to the underwriter, saying, "Can you tell me what a lease is?" Yeah, quite.
Yeah.
So, excuse me. So there's always limits, but Janet, that's why we're here, so we can help you with any cases you have for Shawbrook. We've been dealing with Shawbrook since 2011. And we're one of the very first brokers to come on board, and also for quite some time held the record for the quickest completion they had as well in their early days. So Colin has said, apologies, could you confirm that you lend to first-time landlord on an HMO property?
Yes, up to 6 bedrooms.
Fine, okay. Okay, and Janek said, new immigration rules come into force from Jan 25. I got Asian market and most clients are on 10-year rules for LTR. I'm not sure what LTR is, to be honest.
Yeah, I mean, to be fair, with the foreign national aspect, it's a case by case basis. But what I would encourage you to do is to speak to Tony, and he can double check with us in relation to how long's left on their visas and whether we can accept them. Me and Tony speak regularly. We speak quite a lot in regards to that. So I'm more than happy to obviously look into that and see if we can provide a solution for you and your client.
We'll be talking even more now about West Ham and fishing. Oh, my Christ.
We will, mate. We will.
Rhys, nice one. Thank you for that. I mean, you're actually dead on time now. It's 11:15, so perfect.
Yeah, I don't feel like anyone missed out on anything. So yeah, thanks for your time, everyone.
There's plenty of time. There's plenty of opportunities for you to come back. You can cover something else next time. So
yeah,
Simon will remove you from the room. Don't do it yourself, just in case you close down the entire show.
That's right.
Which has been attempted in the past. So everybody, what we'll do, everyone, is we'll come back at 11:25. So literally just 10 minutes. So quick comfort break. I've got to ring a client who wants me to be a tax advisor, unfortunately, which I'm refusing to do. So I'll see you again in 10 minutes. Welcome back, everybody. So that client I had to call wanting tax advice. She also wanted advice on what she should do with the £20,000 she's got to go towards a purchase that she's kept under her bed for some years and probably hasn't declared. I didn't ask the question. What should she do with it? And then asked me, should she go ahead with the purchase of a property? Would I advise her to go ahead? I said, I can't advise you that. Still, okay, there you go. Right, okay, so our next speaker, I know he's not quite in the room yet, but hopefully will be shortly. You think he might be, actually, because he's moving the mouse around. So our next speaker is Chris Pedlar from United Trust Bank, who I've never met, actually, because he covers the north of England. But so I'm sure he's going to be absolutely fantastic, as all the UTB people have presented in the past. So, okay, you should have received this today. This is United Trust Bank. Must stop calling me UTB. Their mortgage and second charge loans guide. That's come out to you this morning via email. A little bit about Chris. He's worked in the finance industry, and I'm going to have to talk slowly because he's not appeared on screen yet, which is never a good sign. So he's worked in the finance industry for 20 years, the last 10 of which have been for lenders, including the last 7 at the United Trust Bank. Prior to this, he spent 10 years advising clients on first and second charge mortgages. Outside of work, Chris enjoys keeping fit. His latest fad is CrossFit, which he finds extremely challenging. Alongside this, Chris spends his weekends with his family, dogs, and attempting to play football. Okay, he's still not appeared. Technology, I hate it. Okay, oh, hang on. Something just happened there. Somebody has changed something they shouldn't do. Apologies. That certainly wasn't me. I will go back to the presentation. Okay, so Chris's claim to fame. Chris, I think you might be clicking on stuff that you shouldn't. If you could, you need to be added to the room. I can see you moving the mouse around because it comes up with Chris Pedlar alongside it. So Simon will add you to the room. Okay, so I've just heard Simon shout out he's in the room. Just that I can't see you at the moment. So I'll just speak whilst that's being sorted. Chris's claim to fame. Chris has completed over 30 marathons, 30, and ultra marathons, with his highlight being competing in the Comrades Marathon in South Africa, a 56-mile race. The closest I've ever got to that is eating a marathon before they became a Snickers, to be honest with you. A marathon. Even the word fills me with dread, unfortunately. Okay, so when Chris appears and is able to present, and my IT people, I can hear lots of kerfuffle in the background. Paul Rose has said that, Chris, you need a hobby, which is, well, possibly that is his hobby, who knows. Normally these shows go without a hitch, no problem at all. This is the second one we've had where there appears to be a problem, so not quite sure why. Well, I'll line up his first slide. That's probably the best thing. If there is an issue, this is going to be one of those situations where I'm going to have to blag it. I'm hoping I don't have to, because I'm a little bit out of touch with the criteria for UTV second charges, other than that they've currently got the cheapest published rate. That much I do know. But hopefully I won't have to blag it. But I have had to do that twice in the past when speakers just didn't appear for some reason. Okay, anytime now, hopefully. Anytime. Simon, if you could just ask somebody in the office to give me an update, please. Or maybe not. Okay, happening anytime soon? I'll just check again because he was in the room when I looked a few minutes just before. Okay, he's there, but for some reason he's not appearing. So, Chris, I don't know if Simon's in touch with you. You should see some red buttons just underneath my picture. One is a camera and one is a microphone. If they're red, you just need to click them and make them go green. Anytime now. And I'm hoping that maybe. Oh, I've just had a message that he's speaking to him on WhatsApp. So there you go. We've got some progress. But as we're already 5 minutes in, I'm just wondering whether to maybe make a start, just in case he can't appear at all. Otherwise, you're all sitting there watching me scratch my neck and looking very awkward. And so he's in the room, but just we can't see him. Okay, it looks like Bill Gates is having an absolute fun day with us today, doesn't it? I think he's sitting in his wherever he sits on his PC, having a little medal of some sort. Right, okay, yeah, it's not coming up, so. This is one of these where I've got to blag it. So please bear with me, people. I might have been doing this for 41 years, but there's some bits I'm not going to know. So obviously I know who UTV are, but I don't know much about their background. I think they started in 1955, and that's from memory. So what I'll do is, so this is something that I'm not going to be able to talk about because there's a whole spiel on each of these bits. So I think if you just bear with me 1 second, I'm just going to see exactly what's going on and find out why Chris is not able to appear. It is live, obviously this, so it's what happens when it's like live TV, I suppose. Sometimes things go wrong. Right, everyone. Now, just had an update. Chris is restarting his laptop because there was an issue. Although he was in the room and then was added as a speaker, it would appear that he wasn't getting any of the buttons appearing to actually be able to appear, if that makes any sense. So in the olden days, it would be, whilst we're just waiting, here's some music, but I'm not going to sing. So because that wouldn't be fair on anybody. Okay, so let's see if he's back in the room. No, we've still not got anything. Right, what bits can I cover? Let's see if there's anything I can cover that just whilst we're trying to get Chris here, just in case he, like I say, if he doesn't appear, then we can't just sit here for 20 minutes waiting for the next speaker to appear. I've just checked to see if the next speaker is on at the moment, but he's not. Okay, let's start with the mortgage market trends. I'm not aware of any of this. So as I say, I'm blagging this slightly, but according to this particular slide, 1 in 5 people have missed a payment in the last 12 months. I presume that's on their mortgage. 1.6 million fixed rate deals will come to an end in 2024. That we're all aware of, because no doubt, just as we have, when you go back to a client and say, guess what, your rate is no longer going to be less than 2%. It's now going to be more than 6% potentially. They go white and then sort of like think, I can't afford that. There's one particular, actually, someone I'm very close to, very wealthy man, luckily. He paid off his entire portfolio from his savings, because when he realised that his rate was going to increase by 4%, it didn't actually make it particularly profitable anymore. So he's just cleared everything. Average house price is 8 times average UK salary. The stupidity of the mortgage market in this country is that my daughter, for example, can afford quite easily £1,500 a month rent, but according to lenders, because of the daft rules we've got in place, cannot afford an £1,100 mortgage payment. But that's the way things are. 9 in 10 people choose a product transfer over a remortgage at the end of 2023. We're all aware, anybody in the mortgage market would have seen that. You've got so many now people coming back. Opportunities aren't what they were for mortgage brokers in the market, and has become increasingly difficult. In Q3 23, 27% of landlords plan to remortgage within 12 months to release equity. I don't know whether it's going to be that much now. I've quoted somebody this morning for a buy-to-let mortgage, and it's quite a sizable one, but the product fee is £170,000. And that was the only one it qualified for. So she's weighing that one up at the moment as to whether that's actually a good idea rather than selling the property, because that's not what she was expecting when she started the refurbishment 18 months ago. And in Q4 2023, 1 in 5 first-time buyers were borrowing over a 35-plus year term. And quite simply, a lot of people now will be asked about what their retirement plans when they're in their early 30s, the way things are going. As we know, most people in their early 30s haven't got a clue what they can, they haven't even thought about that sort of stuff yet. They might be putting some money away, but they don't know what their pension's going to be worth. They have no idea. So, who are United Trust Bank? This is just from what I know. They're a specialist bank based in central London. There you go, I was right. Established in 1955, very well funded. Launched into mortgages 2015, and success recognised awards received. Mortgage team is 60 and growing, 100% intermediary focused, and as you'd expect, swift in response. Cover pretty much everything. They cover second charges, regulated first charges, unregulated buy-to-lets, bridging, regulated and unregulated. I don't believe they're in the commercial space yet. They do have a structured finance division who we've used a couple of times in the past. But that's pretty much all I can tell you regarding UTB. I really am winning this. Okay, how can they help? So there you go. Next, nearby to commercial, high-rise, ex-local, farmhouse, grade 2 listed. They're a lender basically that will look at the majority of properties that are out there and really aren't particularly bothered. I can remember when they first launched some of the products, things like flats with balcony access, for example. Most lenders frown upon those. UTB more than happy to take. But they'll look at most things. There's a small list, but because I wasn't expecting to actually be telling you, I haven't actually printed anything off to actually go through it. Tricky income. Chris is now back in the room because he's moving that mouse around again. and hopefully I'm not making a complete pig's ear of this. And we do test, just by the way, we do test every speaker like a couple of days before the show, just to make sure that everything is going to work okay. Because obviously there's always situations where maybe one computer is not compatible with another. Or there's the famous incident where we had a very senior person within a lender go to present, and she didn't have a camera or microphone on her computer, to which I had to then phone her mobile to mobile, and she was shouting through her mobile to mine. I was holding my mobile to the speaker of my laptop and changing the slides for her. So since then, we've always done a speaker test. So tricky income, pretty much as it says there, multiple income streams, sole traders, complex income, 21 to 85 years old. Chris still isn't there. He's down as a presenter, but he's still not appearing for some reason. And if there's any blips, they are very flexible when it comes to adverse credit, arrears, down on unsecured lending, all the rest of it. Again, you've had the paperwork, the documentation come out to you on email this morning, so that will be able to cover a lot more of what's available from UTB. Okay, second charge highlights. Bear me 1 second, I'll put this on mute because I'm about to give an update. Okay, what we're going to do, I've just been told that Chris cannot get his speaker or microphone to work at all. So just as I mentioned what we did before, but way back in 2020, which is the reason why we started doing speaker testing, I'm going to ring him and he's going to hopefully speak through the phone. I hope this works because, well, it should work. Let's have a look. If you can just all hum to yourself just for a little while, just whilst I do this.
Hello, it's Chris from United Trust Bank. Sorry, I can't take yourself. If you'd like to leave the name and number, I'll call you back as soon as I can.
Okay. Chris, if you can hear us, that went straight to answer phone, which probably means you're on the phone to someone. I'll try again. If you can maybe come off the phone. Oh, we've got a ringing.
What are you doing?
Hi, Chris.
How are you? You okay?
Yeah, I'm fine. How are you?
I'm okay. Technical issues, performance issues. I'm quite used to this.
Performance issues. We don't want to hear about your performance issues. Thank you very much. That's for another meeting. Right. What we do, how we work this, Chris, is that you speak, and when you want the slide changed, you tell me. And there's a very bad echo, so I'll stop speaking. All right. So we'll go back slightly. We'll go back to. We'll stay on this one actually. No, actually, no, we won't go on that one. We'll go on this one.
Okay.
Oh, and we've now got terrible feedback. So. Yeah, you don't want to keep it too close to your laptop.
That's fine.
All right.
Okay. Is that working?
That's fine. Can everyone hear Chris? Okay. Can everyone hear Chris?
Talking now. Okay. Console all the way up to 85%.
Okay, Chris. I'm getting some feedback that some people can't hear you. So, can you mute your laptop? Because that's why we're getting the feedback, okay. And we try and work out why. Okay, so go on in. So carry on. Go on.
Okay. So yes, from a DECCON perspective, especially on first charges, we know that many first charge lenders don't allow DECCON above a certain LTV banding, whereas we can go to full 85% with no LTV restrictions on the debt console. So we mentioned on the previous tab about the property types that we lend to. Unlike a lot of other lenders, we have got no defective property list. What we rely on is the surveyors, when they go out to the property, confirming that that property is mortgageable, that it's habitable, and that it's traditional with the area. Now, what I would say is 70 to 75% of the applications that we do are on an AVM. So that will always be the first port of call anyway. If the AVM is not successful for any reason, then we will, then you can instruct the valuation. And as I said, the property type, as long as the surveyor confirms it's mortgageable, habitable, and traditional with the area, then that's something we can do. So examples of that For example, I don't know, high-rise flats in central London, say 20 stories up. I know many lenders have restrictions where they won't lend above the 5th floor or they'll cap the LTV. Again, from our point of view, that doesn't affect us. We will lend to full 85%, and there's never an LTV restriction based on the property type. Okay, so whether that be ex-council flats, flats above shops, ex-council houses, anything quirky, I would certainly put the referral into Tony and the team and let them ping it across to us. And more than likely, we might send a quick email to the surveyors, and what they will do is they'll just ask the surveyor and just see if it's something that they think they can put a mortgage valuation on. As I mentioned a second ago, we do automated valuations, and they do run up to 80% loan to value. We have got a minimum property value, which is £90,000. However, anything under that, then as long as the LTV doesn't exceed 60%, then that's still something that we can look to help your clients with. From a product perspective, we do loans up to £500,000, and that is all the way up to 85% loan to value. We've got a 5-year fixed rate product with no ERCs, so your client's got the benefit there of fixing for the full term, but able to exit at any point in the 5 years without a penalty being charged. We do have products available where you can have a missed mortgage payment in the last 12 months. It can't be in the last 3 months, but one missed in the last 12 is acceptable. And we do have loan terms available to 30 years. Now that's including part years as well, whereby if you know that the client has got, if you wanted to run alongside a mortgage and that mortgage has currently got, 125 months left, then you can do the term over that period. From an income perspective, from a self-employed perspective, firstly, we do always need 2 years figures, okay? However, we will always use the latest year's figures when we are calculating affordability. So again, some lenders will work off an average of the last 2, the lower of the last 2, but we won't do that. We will work off the latest year's figures. And in some cases, we can work on a projection as well. So if we've got an accountant who's given us a certificate where the projected year has already been and gone, for example, if you've got someone whose financial year finished in, let's say, July 24, and the accountant is prepared to put together the figures for that without submitting them, then we can accept them. Again, speak to Tony and the team, and they'll refer them on through to us first of all. Employed-wise, your clients need to be employed with the same employer for the last 3 months, as long as they've got 12 months continuous employment, or it's just 6 months in the current job. Either case, there can't be any probation in place. So we can use commission, bonus, and overtime. We will factor 50% of that. So again, Tony and his team will know how our system works. You can work out what you think that the income is over what an average is over the last 12 months, and put that into our portal, and we will use 50% of that. Recently, we have started using annual bonus as well, which is something that historically we never would lend, or we never base the affordability on, but we will now take that into account. All our affordability is based on a couple of factors, mainly ONS. We do have an LTI and a DTI system as well. With regards to benefits, we will take any child-related benefits, so child benefit, child tax, and working tax, and maintenance as well. So we do say with maintenance it has to be court-ordered or through the CSA. However, more recently we have looked at applications where clients have got an arrangement with an ex-partner or ex-spouse, and if we can see a history, maybe 12 months of payments coming in regularly, then we can use that without a court order or the maintenance. Okay. We have just started in the last month or 2, we have just started using fostering income as well, which again, since I've been working at UTV for the last 7 years, we've just never accepted it. However, we will now look at it, and all we need to see is the latest 2 years SA302s to almost treat as self-employed. Thanks, Tony. Next slide. Okay, so we'll lend for any legal purpose, including business loans. Okay, so when I say business loans, if you've got someone who is looking to purchase maybe the premises that they trade out of, then that's absolutely fine. If you're looking for someone looking for a loan for someone who wants to make an injection into the business where you want to do a big marketing campaign, it's going to cost them £50,000, then maybe that's not one for us, okay? But if it's someone who's looking to invest money or put money into the business for premises, for goods, machinery, things like that, then that is something that we can consider. Normally around the January time, we get a lot of inquiries for tax bill payoffs, and again, that is something that we can do, whether it's in the current year or a historic bill for tax. Obviously, with a historic build-up, there might be some further questions along during the underwrite, but that is something that we consider as well. As I mentioned a second ago, we have got a plan available where you can have one this mortgage paid in the last 12. I can give you an exclusive, Tony. Tomorrow we will be changing criteria slightly. We've got a new system going in deployment throughout the day and tonight. Currently, we have got rules around clients who've got adverse credit, CCJs defaults over 24 months. But as of tomorrow, we will be ignoring all adverse over 24 months, which is a big step for us. Okay. If the client has got unsecured arrears, then they're in a position to bring those up to date, free offer, then we'll actually ignore them we'll ignore the adverse, following the adverse rules. So again, if you've got someone who's one payment behind on a credit card, that would normally sit on our near prime plan, our lower plan. But again, if the client is able to bring that account up to date, pre-offer, and evidence it, then again, that is something that we can look to do. Subject to credit score, but on our cleaner plans. Okay. On consolidation, all credit cards, mail orders, loans as well. Now, I know that's not on the slide, but loans as well. We will give that money for consolidation to the client, and it's on the client's responsibility to pay the creditors. Okay. On mail order, any communications, mobile communications, arrears, default CCJs, just completely ignore, and any CCJ or default under £300 is ignored as well. We can lend up to a client's 85th birthday. If your clients are over 70 at point of application, then they will need to go for independent legal advice. We can lend to clients in a debt management plan. Now, whether that's clearing the debt management plan or not, we can lend either way. We know that it's not always best advice for someone who has got a debt management plan in place to clear it. For example, if someone's got a couple of £1,000 on a plan and there's only a year, 2 years left to run on that, then taking a loan out, consolidating that over a 10, 20-year term on an interest-bearing loan is probably not the best advice. So from our perspective, if you're not paying the debt management plan off, please don't work off the debt management plan payment, work off 3% of the outstanding balance. Okay? Okay, I think this is quite a good USP. So we've got, with this mortgage payments, we know that some lenders are quite trigger happy, let's say, when reporting missed payments to the credit bureaus. With ourselves, if a mortgage payment has been missed, but they have made that payment before the next one is due, then we won't class that as an arrear. So if the credit search might say that it's a missed payment, and it might be showing us a missed payment, but if we can get a 12-month statement from the client or from you guys at Specialist Hub to say that the due date of when that payment was due and the actual date that they paid it, and as long as that was paid before the next payment was due, then we won't treat that as arrears. With regards to IVAs, then we always say now 12 months from discharge. Okay, so as long as your clients have been discharged for 12 months, then that is something we can look to do. Slight bit of criteria on that. I mean, if they've fallen into arrears on some accounts again post settlement of the IVA, then maybe that's not the best thing. That's the best case for us. But again, if the credit's been clear since the IVA is finished, then that is something you can look at. And just touching on the different types of employment. So we do 0-hour contracts, agency workers, fixed-term contractors, and normal contractors as well. All of which we can now help out. Okay, so on the next page. Okay, so these are the adverse rules that we've got. Okay, so you can see there we've got 3 plans, which are our Prime Plus, our Prime, and our Near Prime. And then we separate the adverse rulings around unsecured mortgage, unsecured, CCJs and defaults. As I said before, all mail orders, comms, any default CCJs for those and any under £300 are completely ignored from the adverse rules. So again, this is slightly, I want to say out of date. It's currently in date, but as of tomorrow morning, it will be out of date. Like I said, anything over 24 months, CCJs or defaults are now completely ignored from those adverse rules. Okay, whether that's on the Prime Plus, the Prime, or the Near Prime. As you can see, the top 2 plans have got not allowed any mortgage arrears, and the bottom plan, that's the one where you're allowed one missed payment in the last 12. Okay, thanks, Tony. Okay, and the last bit that you can see on the screen is just some feedback for some testimonials from clients of especially October and then other clients as well. I'm not going to go through all and talk about on that side, but yeah, all the testimonials are there for you to see. So what I would say at this point, next slide, Tony, if you have got any questions, then please refer them through to specialists. And what we will do is we'll happily speak to them, talk through any of the clients' inquiries. We are a manual underwriting bank, so again, if a case doesn't quite fit criteria for any reason, but there is definitely a case to argue, then call us, call me, call Tony, and then we will happily talk you through and see if there's an outcome for your client.
Chris, thank you very much. There's only one question, but I'll be honest, it's one that I can answer anyway from Stefan. We've lost quite a bit of time at the start, so I want to. But don't worry, it's not this. It's out of your hands. It's techie stuff. Nothing we can do about it. Get the bosses to buy you a new laptop. It's always the best idea. So, fine. Thank you for that, Chris. Really appreciate it. Difficult circumstances. I know. I don't know why I'm looking at my phone. Difficult circumstances, but thanks for the presentation. All right, I'll hang up now because I'm getting arm ache because I'm going to be phone up in the air. All right, cheers. Right, sorry about that, everyone. Okay, we did just have one question, which was Stefan said, what is your view on the new second charge lenders coming to the market? Well, I always say the more the merrier. As long as they bring something new to the market, there's no point coming into the market with basically the same criteria as half the competition and then undercutting their rates by 0.05%, for example, which some do tend to do from time to time. They need to be bringing something new to the market, because if they don't, what's the point, quite simply? But hopefully, well, from what we've seen so far, it's looking fairly good. And it's good, just very good that the second charge mortgage market is expanding. Getting back towards where it was in the sort of like the 2007, 2008, where it was worth over £6 billion a year, and is a very useful product. And of course, now it being a regulated product and a mainstream product, I know a lot of people out there, a lot of advisors are still very wary of second charges. We are doing stacks. So if you're not offering it to your clients, then quite simply, they will just go on Google, to be honest. And you can then potentially might have lost a client for good. So, okay, right. Hopefully, the next speaker will be coming. I'm not even going to look, just in case. Will be coming on in a second. And just hope to God. But yes, okay. Is there anything? No, can't see. This is Octane. Yeah, Josh is here. Thank Christ. Josh saves the day. Can you hear us, Josh?
Yeah, I can hear you fine. Can you hear me?
Perfect. You're a bit echoey.
Oh, I don't know why.
How far away are you from your microphone?
Very close.
Oh, yeah? Okay. Well, just keep dipping your head every time you want to speak like that.
Is it better when I come in closer like that?
It is better, yeah. Get less of an echo. So, yeah, your face is now absolutely huge on the screen, by the way, but that's not a problem. At least we can hear you properly. Right, anyway, next speaker, Josh Knight, Octane, old friend of the show, even did a Sutton the Specialist last month. And always, I mean, I must admit, last month was the feedback we got was absolutely fantastic. So I will be quick on this because we are a little bit behind time. So you should have received these today, this morning, on your email. A little bit about Josh. Joined Octane in early 2018 as a business development manager. 6.5 years later, he now holds the position of sales and marketing director and is part of the firm's senior management team. Josh's experience in managing intermediary relationships spans both the private equity and property finance sectors, seeing him hold positions at GMAC, Octopus, Mariana Capital before joining Octane. Josh has found his passion in specialist lending. He enjoys working on complex cases and helping his brokers to find solutions for their clients. And his claim to fame, guess what? More marathons. This was actually brilliant, though. June 2020, Josh ran 5 marathons in 7 days to raise money for the NHS during COVID. If we could do a virtual round of applause, that would be fantastic. Josh, over to you. We've got a couple of minutes to try and catch up on, but I know you'll be fine.
Good stuff. Hi, everybody, and thank you, Tony, for having us on today. If you have problems with me and my microphone, I'm going to lean in as close as I can, but just let me know if it's echoing. And I'll do my best to lean in further. So my name's Josh. As Tony says, I'm Octane Sales Marketing Director. If you're not familiar with Octane, I'll just do a quick 30 seconds on us as a business. It won't take long because we're a really straightforward company. We only do one thing, short-term finance. It's all non-regulated. It's all first charge. And that's all we've done since we launched back in 2017. Despite being what you might deem to be quite a young lender, we are scaling the business quickly and aggressively. We've already surpassed £1.75 billion of lending. We're well on our way to 2 billion. I'd be surprised if we weren't there by winter. So we are growing very quickly. I think this first point is a prominent one to highlight. Unlike most short-term lenders that aren't banks, we are funded just by one funding line rather than having multiple. And that funding line is also a majority equity partner within Octane. And that, I think, gives us real stability, and it means that we can lend at scale. And it means that we don't have to keep changing criteria every time we go on the hunt for a new funding line. It just gives us real stability. And one of the products of having a funding line that is also an equity partner in the business, it means that our cost of borrowing is much lower than most bridging lenders, and consequently, it means that our rates are much lower than most. Our rates start at 0.33% a month plus Bank of England base rate. Now, that, as of today, with the base rate of 5%, I mean 9 or 1% a month, 5 is pretty cheap when it comes to unregulated. Our rates are linked to Bank of England base rate. Oh, Tony's jumping back on. Is there?
Josh, you're freezing quite a bit for some reason.
We good?
We're not having a lot of luck today, are we? Really not. Yeah, can you hear me?
Yeah, I can hear you fine. Yeah,
occasionally you're freezing, and you're freezing, but we can't hear. So I guess carry on. Just be aware that occasionally you're.
Give me 1 second. Let me see if I can change location. Just give me 2 minutes.
I just went back into the office, and today's show was described as something that I can't actually say on a broadcast because it contains a rude word. Normally, I said before, normally these go absolute plain sailing, no issue at all. Maybe Mr. Gates is doing, I doubt it, but something's going on. I don't know what's going on today. I know it's not our broadband, so it's an issue. Well, hopefully, you're not all going to leave in droves because there's nothing happening. Because Josh has got quite a bit to say, and they are an excellent lender, and we've been using them now for since they started. Basically, we moved our business over because previously the people who set up Octane were at Octopus Investments, and we used to give Octopus business and decided to move our business over because we found that Octopus became a little bit too corporate for our liking. So Octane is now one of our lenders of choice. He's back. Okay, he's coming back. He's back. He's anytime now. He can be added to the room. Hopefully now might be connected directly to the router possibly. So he'll probably be doing the rest of the presentation by his front door if he's got a house like mine. But he's not coming back, which is unfortunate. Andy Virgo, hi Andy, haven't spoken to you in ages. I just said I've watched many of these and it's certainly not the norm. Well done for keeping it interesting, Tony. Well, I don't know about interesting, Andy. I think that's probably a little bit. Josh is back in the room because he's now moving the slides around, but we can't see him. I'm just wondering whether we're going to have to do the same again. Oh no, he's back. Fantastic. Yeah. New room.
Sorry.
New house. Right, I'll go away. Can you carry on?
We're back, and I'll catch up the time. I agree with this is not the norm, but it's just Wi-Fi issues. But we're in a better location now. So as I was saying before, our bridging rates are amongst the cheapest in the market. 0.75% per month is pretty cheap as of today. But we have that added benefit or potential benefit that our rates are linked to the Bank of England base rate. So if your client borrows from us today and the base rate were to drop, again in the autumn, your client's rate would get cheaper during the term of the loan. So all of our products are tracker rates. They track the Bank of England base rate. One thing that we've noticed over the last 18, 24 months or so is this notion of a landlord, or maybe a more vanilla landlord, turning towards more alternative strategies as a way of hunting for better returns. And this rather dramatic looking graph that you will see on the screen there plots net of tax profit as a percentage of rent. And as you can see, and this won't come as any surprise, it's dropped off a cliff last year. And that's a result of a few different things. Tax has gone up, rates have clearly gone up over the last 24 months or so, and that comes with affordability problems, but also running costs, maintenance costs, and of course, EPC requirements, which are back on the agenda for the new government. All of those things combined would have meant that if you are a landlord that is typically only invested in single tenancy properties, and you're investing at a high loan to value with income as your objective, you could now raise the question whether that is a viable strategy in the current market. And it's for this reason that we've seen a huge swathe of vanilla landlords looking at different ways of engineering value, whether their goal is income or whether their goal is capital appreciation. And when you're looking at making a change to the use of a property, that's what Octane are well positioned to help with. We offer refurbishment finance. It's our most popular product. And this is where you are altering or changing an existing property. As I mentioned before, our rates are among the cheapest in the market. And when we're looking at a refurbishment loan, there are two parts to our loan. The day one loan, which is the amount that we lend on the day the loan completes. So if it's a purchase, that's the amount that we're lending towards the purchase price. And then the refurbishment facility. Now, the day one loan, we lend currently at 70% loan to value net. Now, there's a reason that net is rather excessively in bold capitals and underlined. And that's because unlike most bridging lenders, we don't deduct any interest from our day one lend. Most lenders in our space will take 12 months interest off your gross loan, and your net loan will be the figure once that deduction has happened. Whereas we don't do it in that way. We add interest, and that simply means that your client has no interest deducted from the day one lend, 70% net towards the purchase. In addition to that, we will fund 100% of any refurbishment costs, and your client would draw down on that refurbishment facility throughout the term of the loan until the project has been fully funded. Drawdowns are overseen by an asset manager, not a QS. So it's designed to be very light touch monitoring. We're keen to get the money out the door as quickly as we can because we only charge interest on drawn funds. Now, this refurbishment product can be used for a whole swathe of different projects. Starting down the lighter end of the spectrum, decorative refurbishments. So this is your traditional sort of homes under the hammer stuff, purchasing a property, maybe at auction, that's in poor condition. Perhaps an elderly couple have lived in there for 30 years and it all needs updating, new kitchens, new bathrooms. It's a great way of adding value, especially if you're buying below market value, as is often the case on the auction front. Structural refurbishments are also fine, converting the loft of a property, extending to the rear or the side of a property. And then finally, changing the use of the property, converting a house into HMO, converting a house into flats, or a commercial property into residential. Now, this change of use sort of area is one that I'm really passionate about, but also I think that this is really where the biggest opportunity for your clients lies. Permitted development rights are pretty relaxed in the UK, and as of a couple of years ago, the summer of 2021, the rules became even more accommodating. And there's two areas I think are really interesting. The first is, if you're buying a house that's in an area that's not subject to an Article 4 direction, it means you can convert it into an HMO of up to 6 bedrooms under permitted development. You don't need a formal planning application. In fact, you don't need any approval from the local authority to do so. The second is vacant or certain vacant commercial properties can be converted into residential, again, under permitted development. You would, in that case, need a prior approval application. But the point is that you can make major change to the use of a property without the need for a full planning application. Kim has just written in the chat, Tony, has sound gone for everyone? I really hope not. Let me know if everybody else can still hear. I'll carry on for now, but hope everyone can still hear me.
Not for me, Josh. I can hear you perfectly.
Right,
So,
okay.
Kim, I'm sorry to say, I'm hoping that's just you. Carry on.
The problems continue. We move on. Now, this is a brilliant example of how a client was able to dramatically improve the income potential of a property. And this idea of converting a house into an HMO, I think, is a really powerful one to talk to your clients about. Now, this property, it's the one with the white frontage you'll see in the middle, is a bog standard 3-bedroom house in Bristol city centre. Now, I consciously chose Bristol as an example here because Bristol is one of the only major cities in the UK that still has big areas with no Article 4 direction. And without boring you to death with all of this different legislative chat, if you're buying a house that's not in an Article 4 area, you can convert it into an HMO of up to 6 bedrooms with no need for planning permission. You can buy the property and you can start working on converting it immediately. And that's exactly what our client looked to do in this case. They bought the property for £320,000. They wanted to spend £175,000 converting it into an HMO. And what that looks like is every room that's not the kitchen essentially becomes a bedroom. They put en suites in as many bedrooms as they can, ideally all of them. And the value of the property therefore increases. Now, how do we approach this loan? Just to come back to how our product works, we lend at 70% net day one. So 70% towards the £320,000 purchase price. The client puts in the 30%. We then fund £175,000, 100% of their refurbishment costs, which they draw down on in stages. 2% arrangement fee with no exit fees, and a rate, I believe, if my maths is correct, of 0.8% per month, which again is pretty sharp. Now, here's the kicker. Those two numbers that you'll see over here on the orange, in the orange tabs. This is why I think this is so exciting. This is the reason I invest in HMOs, and the reason why I think so many of your clients would be open to. If this person had let this house to a family on a single tenancy, it would generate £15,000 a year in income. This client has now fully let this property as a 6-bedroom HMO for over £58,000 a year. Now, my maths is awful, but I think that equates to something like a 350% increase in the property's income potential. And just to come back to my original point, no planning permission was needed to convert this property into an HMO. It can all be done under permitted development. Final point from me, and this is if I were trying to put my hat on as you guys as brokers, is that this isn't just a single fee opportunity. If you look at this figure here, the GDV, which is the gross development value, the future value of the property once the works are complete, most of our clients will look to refinance with a buy-to-let lender on an HMO mortgage at 75% of that end value. Now, that 75% new mortgage will not only repay us as the bridging lender, but it will usually release extra cash that they can put into their next project. So if you're a broker, not only are you getting paid on the bridge and on the buy-to-let exit, but also there's another fee opportunity if the cash that they release goes into another project. And that just rinses and repeats. And you'll see this idea of buy, refurbish, refinance. You often hear people talk about that strategy. And that's what we're talking about here. It's not just investing for income that we see. We also look at deals where the client is looking to maximize their permitted development rights, but increase the value of the property with the view to selling it. And this is a good example. This is a 4-bedroom house in East London. Our borrower is buying it for £650,000, and they want to extend to the rear of the property under permitted development. Now, I'm sure many of you know a small extension to most properties is permissible under permitted development rights, again, with no formal planning application needed. This refurbishment was going to cost £250,000 with an end value of 1.25 million. Again, no surprises for how we approached funding this deal. 70% net towards the purchase price, 100% of refurbishment costs funded, 2% arrangement fee with no exit fees, and the rate in this case equivalent to 0.82% per month. And again, these tabs highlight just how much value that you can create. Within the space of a 12-month period, our client was able to refurbish this property and sell it with a 30% deposit towards the purchase price and make a net profit after fees and interest of £225,000. So that sort of dramatic increase in the value of a property is very possible for the clients that buy and source the right deals. Hopefully that all makes sense, but yeah, we'll do questions at the end. In terms of our process, so once you guys go to Tony and his team with your inquiry, Tony and one of his guys will contact us with the inquiry, and we will turn around that agreement in principle, credit back terms within 2 hours of its receipt. We then have an online application process, which is very straightforward. The case gets assigned to a credit manager that underwrites it from start to finish. I, as the BDM that looks after the relationship with Tony's firm, I personally stay with the case from start to finish. It's my job to make sure that it gets done as quickly as possible. And that means chasing valuers and solicitors and sometimes underwriters to try and get the deal done as quickly as possible. An honest time frame for completion for us is about 3 weeks, maybe slightly less if you've got a really good solicitor working on the client side. So we do complete within auction timeframes quite comfortably. And just to sort of recap on the types of deals we can fund, this is specific to refurbs and development. We do other things, but this is probably where we're strongest. Light and heavy refurbishments, everything from a lick of paint all the way through to heavy refurbishment. Converting a house into an HMO. Remember, lots of those deals fall under PD. Converting a commercial property into residential, again, in many cases that would fall under permitted development. And as of February this year, we launched a ground-up development product, which has quite comfortably one of the best rates in the market. But for more details on that, contact Tony and his team. Really sorry for my horrendous internet where I live in the sunny East Midlands, but hopefully that all made sense. Any questions, please let me know.
That was great, Josh. Thank you for catching time up as well. Steve Birkins asked the question, will you do a refurb loan on a remortgage basis as opposed to a purchase?
Yeah, absolutely. So it works in exactly the same way. We lend 70% or as much as is necessary day one. It's just that our day one loan is used to clear the existing lender. And I'll give you an example of that, Steve. We quite often see borrowers that are coming towards the end of a 5-year fixed rate mortgage. And because the buy-to-let market no longer looks like it used to from an affordability perspective. What may have once worked in terms of rental cover may no longer work from a affordability standpoint. So we do see quite a lot of investors coming towards the end of the term and thinking, well, how am I going to get out of this mortgage because the rent hasn't gone up enough to cover the new rates that you'll see in the market. So improving the income of the property, for example, converting it into an HMO, would be a great way of solving that issue.
Okay, right. So I'm just thinking the questions that you set yourself, Josh, you've actually already answered two of them. Just one question. How does the client repay the interest with an Octane advance?
So our interest just accrues daily, and it's rolled up within the loan term. So when you come to repay the loan at the end of the 12-month period, you'll see the interest has accrued over the course of the loan term. So it's quite a common misconception with bridging that there's some sort of monthly payment. Serviced bridging loans are very uncommon. Mostly interest will just roll up, and then you pay it at the end. But just to jump back to one of my previous examples, let's say you're looking at this example. At the end of this client's loan term, they've increased the value of the property to 1.25 million, and they only owe us 65% of that. So there's substantial increase in the property's value for them to comfortably exit, whether it's sale or refinance.
One quick question. Are there any penalties for repaying finance early?
No, we don't charge exit fees ever, and our interest accrues daily, not monthly. We also don't charge fees, and this is something to be very aware of in the bridging market. We don't charge fees if loans are repaid slightly late, and we're as accommodating as we can be if your client needs an extension. But sadly, you will see lenders in our space that charge very high fees if loans go over term. Just be wary of that.
And I saw one the other day, it's quoted through two lenders, one very large bank and the other one very large lender, like high street lender. They were charging 2% in. This is for a refurb, 2% in, 2% out, which is pretty hefty. It really is very hefty. But anyway, you guys don't, and I don't use those two other lenders, so I don't care. Right, this is the bit everyone's been waiting for. There we are. So, Josh, I need you to call me out a number between 1 and 69, please.
54.
54. Okay, so I would like Rob Howard at Ingard Independent Financial Management to say, I'm here in the bit at the bottom, in the type your message, in the next 20 seconds. TikTok. Come on, Rob. Yeah, marvellous. Rob, you just 100 quid. Well done. Josh, thank you so much. The team at Octane will be in touch with you to get that sorted. We don't get involved. Otherwise, I'd need to take at least 10% commission on it, for obvious reasons. But Josh, thanks for that. Thanks as always. Great as always. And I'll catch up with you very soon.
Thanks, guys. Cheers.
Cheers. Thank you. Okay, right. There we go. It's me. Right. I will crack on. Though you're all very, very busy. I am absolutely up to my eyeballs at the moment. I've been working since... I knew today was going to be a bad day when my next door neighbour decided to slam their front door at 4:30 this morning. And I woke up, couldn't get back to sleep. So I started working just before 5 o'clock and was in the office earlier on and fell asleep at 8 o'clock for 10 minutes. So just had a little nap. But I knew then things weren't going to go right today. And it proved to be true. So hopefully this part will go right and you'll find something interesting within it. Okay, so some news. I did say this last couple of months, but it's actually changed slightly because they've added a load more products to their range, all semi-exclusive to us, and a very few other. I think there's only 1.5% of their broker network has this particular product. So if you have any Interbay products, it means cheaper products than what you have available if you go directly. That's across basically semi-commercial, commercial, holiday let, purpose-built student accommodation. It's all there, as you can see. And also cashback now. It says semi-commercial, also now on commercial. So there's lots and lots going on there. Castle Trust, once again, I'm going to keep banging on this one as well, because this is a similar product to the one that Josh has just been talking about. This one goes to up to 80% net current market value, and they will also accept below market value transactions as well. And they also now have rates on one of their other bridging products from 0.52% per month, but that is serviced. So it's a particular type of client who can take that. And I keep saying this one as well, we've launched a completely exclusive second charge product. And I know one of the directors of that lender is watching now, so hello to you. 75% LTV, income calculation will complete more business, any amount of adverse accepted, excellent earnings potential, available on buy-to-let properties. We're going out to all the other brokers in the market who deal directly with lenders, so which I would probably say is about 40 that we class as true competitors in second charges. So if you're using somebody else and you find that you might find that your case might actually come to us eventually, but of course there's someone in the middle who's going to take a bit of your income. So always have that in mind. If you come to us direct, you're just going to earn a little bit more. And also, of course, we pay you on the day of completion. And what I've learned since our last show, now the last 3 weeks, I've been covering for staff whilst they've been off. So I did this last night. I had to get this off my chest, because what I've learned is that Barclays residential mortgage submission is absolute shit. I've never come across anything quite as bad as their system, as especially yesterday, where we cannot submit a mortgage because their system cannot find the address of the Bupa hospital where the client works, and there's no workaround. Great. West One's residential mortgage submission, after Pauline's presentation earlier on, I don't know if she's still watching or not, but their system is fantastic. About as easy to use as I've ever come across. So I'm very pleased with that. The quality of some lender underwriters is the worst I've seen, quite literally, since 1989 when I first went to set up my first brokerage. It is appalling. We had a case last week where I had an underwriter phone me and said, okay, we've run this through affordability and it fails. I said, how much did it fail by? She said, £4. I said, right, okay. Is there any sort of workaround here? She said, no, computer says we can't. I didn't want to say computer says no, but it was pretty much that sort of conversation. I said, you do realise you can't even buy a bottle of wine for £4 these days. It's 2 thingies of milk. It's a decent set of eggs, like a dozen eggs. Really, £4? Refer it to somebody, see what they say. 20 minutes later, I'll refer it and we'll do it as an exception. That is nonsense. I'm sorry, but that is underwriting gone crazy. And the last thing to get off my chest, at times lenders are dropping rates, I think, just for the sake of it. I had a lender last week. You probably know we have our own sourcing systems in-house, which we keep up to date. We had a lender last week who dropped rates by about 0.1 on 4 or 5 products. Every other product where there's a rate change, it was 0.01%. What's the point? Seriously, what's the point? Is that going to bring you in loads of business? I don't think so. But that's what we've learned. The other thing I've learned is that since base rates went down, so many customers now think it means they get a cheaper rate. And we're quoting the same products that we quoted them 3 months ago. And guess what? They've now decided to proceed. Sometimes you just can't make it up. Yeah, but that's sometimes what we're having to deal with. So anyway, that Specialist Hub, for those of you that haven't used us before, and for those of you that would like to use us potentially in the future. Our service, packaged or introduced only. I've had to bring the rule recently for packaged business because we were getting quite a lot of packaged business from non-authorised introducers on non-regulated products. But it was with some of the brokers, it was slowing our system down a little bit. So we've had to bring in a rule that it's only with the FCA authorised brokers for the time being, whilst things are as crazy as they are. And I'm sure that you're probably all as crazily busy as we are at the moment. So we want to ensure that our service isn't affected in any way whatsoever. But if you are authorised by the FCA, you choose which one you have, and it can be you package some products, introduce other products, entirely up to you. And why we're different, not the products we offer. We do have some exclusives, obviously, but pretty much 95% of what we offer is the same as everybody else. Lender relationships. And hopefully you can probably gather from the speakers today, our relationships with lenders are about as good as it gets. When you've been doing it as long as I have, and you've grown up with people in the industry, and you've not peed off too many people in the process, you tend to be able to do more business than those that try and run their business by shouting at everybody. That's not the way we work. We work with our lenders to make sure that we want our lenders to be around in 5, 10, 15 years' time, not trying to get every bit of crap business through them that we possibly can so they're not going to be around. That's not the way we work. But that's very important. The other thing that's really important is the people we employ. I can't stress this enough, and that's what I found speaking to lenders. I mean, some of the people I've spoken to could barely string a sentence together. And I think it's one of the situations where they're given a job because they need to fill a seat sometimes. And I don't find that to be the way forward. I really don't. There's no point having somebody working from home who's been with the company 3 weeks and has been through 3 days of training and expect them to be able to advise brokers or actually talk to brokers on cases. It doesn't work. So my staff, minimum 5 years experience before they even get through the door. This is the important one, mature with life experience, because that is absolutely vital. When you speak to my people, you can actually have a conversation with them because they are adults who've actually experienced a little bit in life. On the rare occasion something goes wrong, they'll know how to deal with it because we're not 100% perfect. And sometimes things do go wrong, but they deal with it. They don't brush it under the carpet. It's not unusual to Walston the Press. Those of you that have been regular attendees of the Specialist Mortgage Web Show know my hatred of the financial press and their award system, which on most occasions, and forgive me if you've ever won an award and you're a broker, because I'm not aiming this at you, but I've seen so many cases of outright, well, just basically bribes basically being paid to win an award. There's some out there who live off the fact that they have awards, and I've seen people crying at awards dues because they didn't win Best Bridging Broker. Or the best one I thought was the guy who locked himself in the toilet and wouldn't come out because he didn't win an award. Grow up, seriously. What else can we offer? One underwriter from start to finish. I find that's very important. Occasionally there'll be somebody else involved like me when someone's on holiday, or of course when it comes to actually paying you, because we pay immediately upon loan completion. And there's no commission clawbacks. We don't get many clawbacks ourselves, but we wouldn't pass them on to you if we did. Our own in-house software sources all business. Bloody difficult to keep up to date at the moment because lenders keep changing their products. That's what I was doing from 5 o'clock this morning. Loan quote, bridge quote, commercial quote, pretty much what it says on the tin. Second charge quotes, because there wasn't anything out there that I found was reliable enough, so we wrote our own. Commercial quote, exactly the same, includes loads of lenders you won't have access to on Mortgage Brain, 27 Tech or Trigold. And then we did bridge quote because there was nothing out there to quote on regulated bridging finance to start with. But I then thought, well, let's extend it to the other bridging lenders we deal with. And this takes hours off the process for us and also any of our broker partners, because it means we can come back to you literally within 2-3 minutes with some quotes because the system does it all for us. Our products, everything that is secured on property is set for equity release, and we also introduce probate loans. And I have remembered that I did promise a couple of you some details on the probate loans, which is all ready to send, but I didn't send it. So I might just send it out to everybody at the end of today's show. Okay, quick case study. Now, I've brought this one in because this actually completed on the 2nd of August. This was a case we placed with United Trust Bank, second charge, where we saved a couple £1,611 a month. They earned a lot of money, and they decided they wanted to do their house up. They couldn't get any more money out of their mortgage lender. They were in a fixed rate, so they didn't want to pay the penalties. They thought, oh, what we'll do is we'll take out loans and credit cards. And by Christ, did they take out some loans and credit cards? £90,000 worth, to be exact. And they were paying, where's the figure, £2,848 per month. So we refinanced that, basically paid off all the credit, reduced their payment down to £1,187. And no, we didn't stick it over a 25-year term, it was over a 9-year term, and they were barely paying, they were struggling that much that they could barely pay the minimum payment on each of the credit cards each month. That's how bad things have got. It just completely got away from them. So we basically reduced their payments way down, over £1,600 a month, excuse me, and the broker partner had £2,500 on the day of completion for doing nothing, because we gave the advice to the client. Not what you know, so you know, forgive me if you've heard this before, but I'll probably be dining out on this to my dying day. Husband and wife business, he was a crook, she wasn't. She ran the nursery side of the business, he did the financial side, absolute crook, defrauded HMRC out of 850 grand, didn't pay any tax and national insurance for their employees for 19 years, which is a worry that HMRC didn't know this. They divorced, all assets in Mr.'s name subject to a Proceeds of Crime Act charge. Now, try place any sort of finance with lenders where there's a Proceeds of Crime Act charge. It is bloody difficult. It is really, really difficult. But it was proceeds of crime act charges based on their home, their businesses, buy-to-lets, the lot. Barclays are called in both commercial mortgages. Northern Rock mortgage have gone over term. She's about to lose everything, quite literally anything. Declined by loads of brokers and lenders across the industry due to reputational risk. There's two words that every compliance department loves to say. Well, what did we do? We contacted Together Money when the deal first came in, declined by their compliance department because of reputational risk. I thought, sod that, that's not going to happen. 10-minute conversation with a director at Together, gave an overview of the case and evidence of what the situation was. He took the case to compliance department, who said, oh, sorry, Mr. Director, maybe our decision was wrong. Yes, we will do that. And guess what? They reconsidered, and yes, we completed it. They came back to me, yeah, all good to go. We paid off both Barclays mortgages, paid off Northern Rock, paid off both buy-to-lets, paid off the proceeds of crime act charge in its entirety, and about 9 to 12 months later, then refinanced everything back onto the high street. Now that, to me, is about as good as it gets when it comes to it's not what you know, it's who you know. Because one phone call that took me 10 minutes basically saved that woman's everything she had. And she still speaks to us on a regular basis and still thanks me profusely every time she speaks to me. Some feedback. I won't cover these too much. I'm absolutely gasping for a drink because I've been talking too much. Let's have a quick read of those. I wish that was vodka in there, to be honest with you, after today. Excuse me. Let's say we are really grateful to you, Kirsty, for a smooth process with no tension. And there's the bottom one, which everything I need to know is clearly explained to me and easy to follow, etc., etc. That's the sort of feedback. We haven't had any bad feedback since 2020. And there was a little thing called COVID going on at the time, which made things slightly difficult for brokers. But we still had clients occasionally not particularly happy because they weren't getting answers in 3 hours. And we all know what it was like at that time. You want to submit a case to us, feedback form, you can actually mention on the bottom of the feedback form that you have a case, what type it is, and then one of my staff will call you back straight away. A completed decision in principle form that we've sent you. There's one for every product. Go on the website and just submit something online. There's, again, every product we offer. Alternatively, just give the team a call on the free phone number. They're ready to take your call. Please follow us on LinkedIn if you would. If you follow Specialist Hub on LinkedIn, I'm desperate to get to. I'm in a competition at the moment with 9 other brokers on LinkedIn. And currently we're running about 6th, the largest increase in basically followers. We won't inundate you with anything on LinkedIn, quite simply. It just means, I think we post twice a week on our hub page on LinkedIn. It's just trying to get those followers up. So next time I see those brokers that are ahead of us, I'm going, nah, which I probably will do because I'm childish like that. But please, if you would follow us, that would be great. And also, our next mortgage show is on the 12th of September. It's a mini one coming up, which is, it's got 3 speakers, no breaks in between, so it takes an hour less. And that's on the 12th of September. We've got Dudley Building Society, Glen Hawke and Together. Not sure what Together are talking about because they offer so many products these days. We're never quite sure, but it'll be something that's not talked about by the other 2. Future dates for our shows, they've got another one in October, then November, then we're planning for next year. And that's where we need your feedback, which we'll come on to in a minute. And also, regarding feedback and giveaways, there should be a little red or orange button appear any second. Come on, IT, don't let me down. Come on, it's going to appear any second. No, I can see a mouse waving around. Okay, well, it will happen in a moment, hopefully. You'll see a little red orange box. Please click here to leave feedback and download giveaways or something of that nature. That will appear. You can click on that and you can also leave feedback and download whatever you want. But you can also sign up for future shows as well, should you want to. CPD certificate, as I mentioned at the start, will be emailed you by close of business tomorrow. If you don't receive, check your spam, then give us a call. If you call me today, I'll say to you, did you watch the end of my presentation? Because I said I covered all this. Yeah, so just please be patient. They'll be with you by tomorrow. Feedback, the other thing you can also do for us, that will be great if you want to leave some feedback for us on Google or Trustpilot, hopefully positive, not mentioning IT issues, because none of them have been our fault today, all completely out of our control. Don't go to Specialists Hub, because that's a training company within the construction industry, and they won't have a clue what you're talking about. But leaving a review for us would be great. We're trying to get our Trustpilot and Google reviews up as much as possible too. A big thank you to today's sponsor, today's show, which is West One. I've just realised I'm 20 minutes ahead of time, which is fantastic. So you still get 3 hours CPD, by the way. Our prize draw sponsor for today, which was Octane, big thank you to them as well. And congratulations to the winner, whose name I've already forgotten. It was Rob Howard. Congratulations to you, Rob. Thank you for attending. That orange button has now appeared, I've just noticed. Click on that one. Thanks for attending. Enjoy the rest of your day. I'm going to go and have a stiff drink, I think, because today's been absolutely horrendous so far. Hope you join us again soon. Cheers.